Hello and good morning to everyone. Thank you for joining us on this conference. My name is Damola Oloko, and uh,
Yeah, we
and myself and Follow Me are the organizers of this event. It's a huge pleasure for us to have you part of this event, and we are looking an impactful session this morning stroke afternoon. This is InsurTech Business Series Conference. It's the first ever InsurTech conference, the first ever insurance and technology conference in Nigeria. And we are super excited that we are bringing this at this moment. Why? Because there's been a lot of talk and conversation around technology, innovation, and all of the things that can bring to the insurance industry in Nigeria, right? And so prior to now, we have been having some engagements with insurance professionals, founders, uh, insurtech founders on our podcast, InsurTech Business Series Podcast. Is a bi-monthly, very interesting, learning from different people from different areas of different places around the world. And so it was very pertinent for us to bring that conversation even more, expand that conversation in terms of organizing a conference. And definitely would have loved the physical one, but then having a virtual one also provides an opportunity for us again to reach a lot more people, reach beyond Nigeria. And when you look at insurance, one thing that I've noticed in the past few months is that a lot of the challenges that we face in this part of the world, in our industry, some of them are quite similar around the world. And this is evident from the conversations that we've had with a lot of people, on our podcast. And we thought it's great to bring together insurance professionals who can come on to really talk to us and help us decipher, some of the things that we are, struggling with, at in the insurance industry at the moment. And the lineup for this event is super great, and it is one that I am really excited about because these guys are coming to share what they have learned from years and years of practicing, years and years of doing business of insurance in different parts of the world. And today we are going to be starting off with a keynote address from the managing director of ARM Life. ARM Life is one of the top insurance companies in Nigeria, and it's a pleasure that the managing director is going to be talking to us, along the lines of the theme, which is innovation and partnership for a sustainable insurance. And we're definitely looking forward to that conversation. And afterwards, we are having a a roundtable discussion where we're talking about simplification of insurance for the emerging markets. And afterwards, we are having a fireside chat with uh, Rashidat Adebisi, who is the Chief Client Officer at AXA Mansard, as well as the co-founder of Curacell, which is an insurtech startup. And the sessions go on and on. And so it's divided into two. So we're going to be having the first session, first part, up until we have a break. And then after a few minutes of break, then we can come back for the remaining part of the we are definitely looking forward to an interesting conversation. And in any moment from now, I will be calling on Mr. Stephen Alangbo, who is the MD of ARM Life, to give his keynote address. And we definitely are looking forward to that. Please take notes, get your comments down. You can use the chat option to drop comments. You can put your questions through the Q&A option there. We are live on YouTube as well, so in case you can't join through Zoom, you can always join through YouTube as well. So we are super excited about this. Again, this is the first ever insurance and technology conference in Nigeria, and we are definitely looking forward to a very impactful one. And we know that we definitely are going to leave here with a lot of value. So the idea around this is just to encourage us to think differently about how we do our business of insurance. There are different ways that we can innovate around how we do our business. COVID-19 has brought a certain reality, and it's important for us to adapt, so that we can survive. So thank you very much. And on the stroke of 10 minutes after 10, Mr. Stephen Alangbo will come on for his keynote address. Thank you very much, and welcome to InsurTech Business Series Conference 2020. Hi, sir. Welcome.
Thank you. Good morning, all.
Welcome, sir. Yes, you have.
Okay, thank you.
Yes.
Yes, I'm really happy to be part of the conference today. I'm so excited about what you guys have been doing. It's been my passion to see insurance improve the penetration in Nigeria. Some parts of Africa have gone ahead, even though with a smaller population, they have improved penetration. When you talk about South Africa, you talk about Kenya, you see a lot of improvement in the penetration. In Nigeria, for one reason or another, we've not been able to achieve much penetration. And I think my talk today will assist or challenge professionals to be challenged to look at how to use innovation and technology to improve insurance penetration. I have a few slides to share, and sometimes I'll take some practical example within the time that I have of how to make us passionate about and see the need to improve penetration. It's obvious that we, as professional and based on the culture in Nigeria, it's really challenging to do it on our own. And that's why the place of innovation and partnership is very key. Now, for participants in this conference, I want to welcome you. I know you're going to have a great time. I've seen a lot that these gentlemen and lady they're doing to be able to enlighten, to challenge us to see how we can have a better penetration. Like I said, I have a few slides to share. Innovation and partnership for sustainable insurance. Let's go to the next slide. So, innovation is imperative. Now, particularly in this part of the world where we have significant population, if we have a better penetration, we're going to have a lot of income that will come into insurance industry that can be used for development and an improvement not only of the economy, of life of the citizen. Now, presently we have various forms of distribution. So we distribute insurance through the brokers or through the agent. There are a couple of cases where we have few aggregators that are coming up to assist in distributing insurance products. But to be able to get out from where we are, to move to where we want to be, we need innovation. Not only innovation, we need technology to make significant change. Obviously, there will be need for products. Now, so there's need for identification of what the needs of the people are. Then we need to have a new way of interacting with them to meet those identified needs. And that will come through different channels and responses through technology to those needs where they can easily be reached. We are talking about 200 million population. Let's go to the next slide. So massive opportunity, not only in Nigeria, in major cities and countries in Africa. Insurance penetration will assist to be able to improve the economy. because there will be available fund and also protection of property, protection of life, and various forms of security that insurance provides will be available. Let's go to the next slide, please. Other sectors have gone ahead of us. The banking sector made significant improvement. Now, you'll see most of some of the best banks today in Nigeria have relied more on technology to drive their products. And they brought convenience to people, to their customers. And transparency also is seen. Now, for us as industry, you see, the stockbrokers also have gone ahead. The pension industry have superior technology. The mobile industry have gone ahead. We've not been able to do much because of many factors. So, but how do we prepare ourselves as industry? So there's need for partnership. There's need for innovation. There's need for us to improve the existing technology to be able to access and achieve the penetration we desire. Insurance is evolving and at a faster pace, more than ever before. Customers are demanding. They are benchmarking other services from other sectors. And they're looking at values that insurance can bring. So until they see the value, until they see the ease, until they see the drive, which is supposed to be through technology, we may not be able to achieve so much. Social network currently is shifting the balance of power towards customer. Technology advances is disrupting the entire insurance value chain, from distribution to underwriting to pricing to loss control. We have major challenge of transparency, and basically because of the peculiarity of insurance business, be it short term, which is general insurance, or long term insurance, life. Now, if the public, the insurance public, can have enough confidence in our business, penetration will be easy. Now, until we are able to achieve that and fulfill our promises, we will not be able to get advantage of massive opportunity that are available for us as industry in this nation. Environmental changes, including the increase in severity and frequency of natural and man-made catastrophes, it's another issue. The pandemic, in many countries in the world, developed countries, a lot of people die as a result of COVID-19. Now, if thank God we didn't have serious fatality in Nigeria, because people, dependents, will have passed away without anything to cater for those that are leaving behind, or breadwinner rather, will have passed away without provision for those that are left behind. And that's the reason why there's need for a bit of attention we pay to benefit of insurance, and also for flexibility on our part to be able to see how to reach them. Rising economic significance of emerging market in Africa, such as Nigeria, it's key. Demographic changes and shift is becoming very obvious. A regulatory development in response to the emergency of new risk is also key. Now, the place of regulation is key in penetration. Now, incidentally, our regulators in Nigeria, they becoming more sensitive to the need to develop the market. And that's why various programs and plans have been put in place to be able to assist the operators. Now, but there is need for collaboration between the operators, not only our regulator, but regulators in other industry, for us to collaborate to be able to achieve the penetration that we talk about. Now, if you see the collaboration between the banking sector and NCC, it's bringing a lot of development to the industry. Because when you want to compare banking operation in the past and now, you see great difference. Now, in the past, you need to go to the bank physically and get teller. They open your account. God help you, you don't have network challenge, because if they are not able to access your account, you need to stay and wait until they are able to. Then, and to withdraw or to pay in, those we have shifted from, because technology, including mobile technology and applications, have assisted the banking to be able to have significant penetration. So, can we move to the next slide, please? The ideal response, and I'll be sharing with you my experience. I've worked in some parts of Africa. I work in the East African region, and I've also worked in some parts of West Africa. Precisely a part in West Africa. I've also studied some customer character behaviors in some part of North Africa. We see that we cannot make significant progress as practitioners if we do it on our own. So we need partnership to be able to achieve the penetration that we are talking about. Now, we have massive, okay, so there's education, there's the issue of trust, and there is trust which transparency of transaction it's key. Now, there's need for us to identify all this to be able to see how to improve the penetration. And you can imagine the population and massive opportunity that are available for underwriters in this country. Now, improving customer engagement and experience. There's the need to provide increasingly personalized solutions. Now, what the banking industry have done is to make banking simple. And you can imagine for a whole year, a particular customer of a bank may not step into the banking hall, but it completes its transaction. Today, for us in the life sector, there is more attention paid to the agents, the financial advisors, to go physically see the people. And that's the best way, before now, that's the best way we thought we could explain our product to the people. Unfortunately, the pandemic came and prevented physical contact. And so the insurance public will need to physically, to remotely assess your product. And they need to have trust in the company that they with. And the product need to meet their needs. Now, so if they identify needs of the customer, then products are designed to meet the needs. It's easier for the customer to be assessed, to appreciate the product, than when we create a generic product and force it on them and explain to them to buy. Now, reducing customers' purchase cycle for improved customer experience. Now, the process of unbundling a client can be very cumbersome for the underwriters. In the banking sector, we have a situation where you open an account within the comfort of your home. Now, yes, we have constraint challenges as a nation, and these we need to gradually deal with. I worked in Kenya a couple of years ago, and in Kenya there is ID number or PIN number, a specific identification number that every citizen of Kenya has, and that number is you get the number at the age of about 18, and it will be with you for life, and no two person can use that number. Now, that number is enough for unbundling of a customer. And if accessibility and completion of transaction is made easy, penetration becomes better, improved. Efficiency resulting from peculiarity of our business, be it life or non-life. That's short-term or long-term businesses. Now, there's need for us to leverage on analytics and artificial intelligence in improving underwriting processes. Now, but we need information. Unavailability of information is a major concern for us as a nation. And that's the reason why partnership is key. Now, so some sectors have data available. Now, all we need to do is design products that meet the needs of these partners and attach the product to their product. Makes it easy for them. Now, the additional thing that does is to make the product attractive and achieve deeper penetration. Now, this will also allow us as practitioners, operators, to have data available for the purpose of analytics, and assumptions and projections can be done with availability of data. Our systems also, technology for the underwriter need to be second to none to be able to ease business operation. Now, we have situation in the life sector where you have a standard rate for everybody. The young man is very conscious about his health will be given the same rate because there's a generic form that everybody completes. Once for life, when your sum assured exceeds a particular amount, you need to go through peculiar underwriting. You don't have access to the information of the proposer, the intending customer. Now, if you have a situation where you have access to the data of that customer at the time you want to unbundle, you don't need to go through all this process because you just leverage on those data, and unbundling will be very smooth and easy. So data will be needed to improve operational efficiency. Technology is key to be able to start achieving that. So creating a more automated, more controlled, faster, efficient, and scalable process will assist us as proper response to this. The banking sector have, because they've gone ahead, some of these they have achieved, and the customer are benchmarking. They're seeing their experience, and they want insurance industry also to measure up. And they have different products and you see measure of transparency in the operation. So all this we need to do. Adding technology, we will be able to achieve deeper penetration. Next slide, please. Other responses. So our product needs to be flexible. If we want to make significant impact, the part that comes in the area of the innovation, that comes in ingenuity, that comes in the product. We cannot just sit and assume that these products will be appreciated by the customer. Because we need to identify the need of the customer and design product to meet those needs. That's when the product becomes relevant to them. And so I often need to be very flexible. Now, customers no longer want the basic generic product. And so there's the need for us to be customer-centric in our product development to reflect deep understanding of the need of the client and also associated risk. Also improving ecosystem partnership. So creating partnership that address and identify business needs. Let me give you an example why some of these developed countries in Africa, they have higher penetration than Nigeria. Now in Kenya, for life business, there's what they call check-off agreement, where teachers sign up to a life insurance policy. And immediately you join, if you see your colleague taking policy, you sign up like them. You just do like a new person in the school, desiring to just know what every other person is doing, and they see that other people have policies. Now that policy is the education authority's advice. And there's a kind of automation where a particular sum of every teacher's salary is deducted and centrally taken by the government. So at a month end, they pay teacher salary less the amount that has been specified for insurance. And the amount that has been deducted for insurance is passed across to different insurance companies on a particular day. Now you can imagine the population of countries like Kenya. When I was in Kenya, the population was for 6 million. And now I know it will have grown to maybe over 50 million. Now you can now talk about massive amount that comes to the underwriter on monthly basis. And when you now compare to Nigerian population, so you now talk about teachers and different sectors in the country. If underwriter and this premium that are paid, they you know, in life insurance, we call something lapsation as a result of stoppage of policy or non-payment of premium. In this case, premium automatically come on monthly basis and are distributed to the underwriter. And for the number of years the client wants to take the policy. The same is applicable to motor policy. Now, if you have a motor policy where there is an automatic, a specific day that your motor policy will be due for renewal, and there's instruction that will automatically deduct premium, the motor premium, from your pay. You can imagine how much underwriter will be happy. So I'm just talking about, so in Kenya, except it's applicable in Ghana, in Liberia, and some in Côte d'Ivoire. These systems are working where there will not be interruption. The people are guaranteed, are protected, and income flows into the system, and generally better for the economy. So, but partnership with, in that case, partnering with government. At other time, maybe partnering with telcos. You talk about bank assurance arrangement. Our bank insurance arrangement now will not go a long way. Bank insurance will not go a long way to assisting penetration. There's need to change the model. I know that the regulators are concerned also, and they've been interacting with operators to see how best to be able to achieve the penetration. But there's need for the regulators to be able to have the same goal of improving the economy, improving all the financial sector. Also, for technology, there's the need to create APIs to enable direct plugin with partners to interface for better service and better experience. Now, we cannot do it alone, and that's where partnership comes in. There's need for us to be creative and innovative to be able to meet the needs of the people. Next slide, please. So this conference is expected to challenge us to be able to see the need, to be able to just not play lip service to the need to have penetration, to have a deliberate effort to establishing a partnership that will assist and strengthen business penetration and collaboration in different sectors. With the rise of digital and mobile innovation in the insurance industry, partnerships are more important to business than ever before. Yet, strategic partnership can propel our industry. Now, our partnership with the brokers need to go beyond corporate businesses. Brokers need to be aggregators for the retail end of the design product for specific sector and call on the writers to be able to design product that meets that particular need, and they distribute the product and create technology to be able to drive penetration. Next slide, please. So it's obvious we cannot operate in isolation. There's the need for us to improve the experience, improve penetration. Increasing sales is critical for us as industry. Now, there's recapitalization that is ongoing, and the guidelines have been given by the regulator. 8 billion, 10 billion, 18 billion is going to be put aside. And you cannot put 8 billion as a life office and generate 2 billion as your premium. The shareholders will see you as not being serious. Ordinarily, if you put down 8 billion, minimum expected income from you will be in the region of a multiple of 3 or multiple of 4 to be able to give shareholders return. So it means that there are a lot of opportunities and a lot of expectation from these shareholders who put their money aside to ensure that they generate guaranteed return. Otherwise, you cannot have that fund and say you have so much capacity and you don't know where to put the fund. Unfortunately, interest rate, fixed income market is down and nowhere to put the money. You generate you get just a little return. As a round up gradually, we're saying that insurance are now leveraging on various digital and social platforms and ingenious partnership to be able to improve penetration, simplification of insurance processes. A process that ordinarily are complicated need to be simplified to make it simple for the people to buy. Our customer experience need to be second to none. They need to interact with you and be willing to come back. Our business operation and capital adequacy. So obviously we need enough capital to be able to do this business. Now, the insurance public will be able to see you that you are able to pay their claim for them to come and have confidence in you. Obviously, capital is key, but there's need for us to be able to ensure that the capital that is required is generating income for the shareholder and is giving confidence to the policyholder. Next slide, please. So, partnership is key. How can we create strategic partnership? There's the need to understand and manage expectation and create structure for partnership. Creating an ecosystem that combines the steady caution of traditional insurance with the fast-moving, fast-changing ethos of startup culture. Now we see insurance is peculiar with different ways in which we do the business, but we cannot make so much progress if we want to sit down on the traditional ways of doing the business. These are changing. People's disposition is changing, and they want ease of doing business. They want convenience. They want the value, and this we need to ensure that we identify to be able to make it attractive to them. InsurTech and FinTech partnership is becoming key. There's need to identify technology that can assist, partnership that can assist, people that have the population that we can leverage our products on theirs, and we all become beneficial of the business. This can only be done by understanding and prioritizing the organizational problem, and finding the right partner who can assist us develop, deliver, and bring value to the client, and also get the buy-in of the stakeholders. The business owners need to approve the partnership. These are governance around all that we're saying, so that all the stakeholders have the same understanding and the same platform, and they can give enough support to be able to achieve this. There is in doing that, there is need to pay attention. We don't need to mix it with the rest of our operation. There should be innovators within our organizations, project managers, those who are saddled with the attention of achieving the success of this initiative. Let's go to the next slide, please. So there's the need for us to have a different mindset to seeing how to improve experience. How can we upscale insurance through strategic partnership, unbundling product features, and distributing them to a larger audience through established FinTech and InsurTech distribution channels? Creation of new innovative products that reflect customers' lifestyle and address their needs. Now, COVID-19 had come, and it's identified an area of insurance that need to be met. Let's create product to be able to see various gaps, and people will see, because their experience is very fresh and they appreciate the product. Cybersecurity is another one. So process automation need to be second to none regarding claims, underwriting, so that turnaround time can be improved and customer experience can be different from what they used to have. Next slide, please. So, in conclusion, with technology disruption, with continuous change in customer behavior and emergence of innovative InsurTech platform, and building an ecosystem for partnership will help create sustainable insurance business And the earlier we know that we cannot achieve the penetration that we desire, and the need to partner with other people in the financial sector and technology company, the better will be the achievements of deeper penetration of insurance in Nigeria. Thank you.
That very insightful session. I hope that we all learned something so far, and we're just getting started. We just had the MD of ARM Life. ARM Life is, for those of us who are not based in Nigeria, ARM Life is one of the leading life insurance companies in Nigeria. And we want to say a big thank you to the keynote address. It was very challenging us to have that change mindset, to do things differently. Is enough. It's okay. I mean, time is up with paying lip service. It's time to work. And thank you very much again. And so it's time for questions and answers. So we have a few questions here, and I'll be taking them now, and I will invite Mr. Stephen to answer. We have a question. So I see that a lot of people are asking about the slide. We'll get the slide across to everyone at the end of the conference. And so this is a question here, and it says, based on your experience, sir, in other climes, like you mentioned, please can you propose an alternative to the use of agents in insurance? Mr. Stephen, sir.
Yes, I didn't quite get the last statement. An alternative agent. Can you read that again?
An alternative. Please can you propose an alternative to the use of agents in insurance distribution in Nigeria?
Okay, thank you. If I hear you well, or I understand the question, an alternative to agency, I guess that's what they.
Yes, in that line.
Yeah. Now, like I mentioned, agency is still key because of the level of development we have in Nigeria. But the regulators are licensing aggregators. Now the brokers are also, brokers basically deal with corporate businesses. And we have technology aggregators in which brokers also can act as aggregators. And we have some tech firms, technology companies that act as aggregator. Now, so all of them, they are playing a major role. You can even have government as your aggregator. Now, so what do I mean? I've talked about Kenya, and I work also in Liberia. Also, it's applicable in Ghana, in Ivory Coast, where government collect premium on behalf of the underwriter from the teachers. And also it could be from other sectors, maybe oil workers, association and all that. The association can be an aggregator where they collect premium on behalf of insurance company and remit the premium to the insurance company. So basically, it is having an intermediary, and it's generally better to use technology to be able to drive that process. That process. The banking sector also can act as in the old bank insurance arrangement. Banks and telcos act like aggregator, where they distribute insurance to their customer and they collect premium on behalf of the underwriters and remit to the underwriters. So they are agents, in other words. And like I said, while the agent assists underwriter to sell, the brokers also can do the same thing. And telco can do the same thing. Government can do the same thing. State government also can do the same thing, particularly because the product, once they see that the product is beneficial to the consumer, then they can act on behalf of the underwriter. Thank you.
All right, thank you very much. I mean, to just add down 2 cents, I don't think the role of the agency can be relegated, can be removed. They still play a huge role. I mean, what is most important is that leveraging their capabilities, leveraging technology, leveraging partnerships with some of these platforms that you mentioned, fintechs and all those people like aggregators, in order to expand and reach more people. So thank you very much. So we have another question here. So this says, please, could you speak on the feasibility of having a central system that allows insurance policyholders to switch insurance providers without having to change their policy number, similar to how and port, to another network without losing his mobile phone? Yeah,
now insurance. So there's need for us to differentiate between permanent PIN number and insurance policy, policy number. Now, insurance policies number, they are peculiar to different underwriters. So at the point of onboarding, a specific policy number is allocated to the customer. And that is what the underwriter uses in identifying that customer. Now, if the customer needs to change or buy another policy within the organization, they will need to find a way of identifying that customer with that other policy. And immediately that customer wants to change the policy and is buying another policy from another company, there will be the need to have a unique identification number for that policy with the new underwriter. So that's how it works. Now, it's a bit different from when you have underwriter having a same platform where the underwriter, where the consumer of insurance will go to that platform to choose specific underwriters that they want to, specific product of an underwriter they want to deal with. In the motor insurance policy that is organized by Nigerian Insurance Association, there are lots of things going on to be able to make collaboration easier and accessibility of product that are offered by the members of the association, that's applicable. But all the same, for that arrangement, there will just be a unique number to identify the client with the company. Thank you.
Thank you very much, sir. So one more question before we let you go. I know that, you have given us a lot and a lot of questions here. So this is from, so it says, do you think new entrants with new business models can disrupt the sector, offering insurance products but not through the traditional insurance companies, the same way cryptocurrency is disrupting payments today? Do you think that new business models would come into the sector without, like, insurance, but not done the way we think insurance is today?
Okay, thank you for that question. And this is a very important question, because the underwriters need to be awake and need to be innovative. Because what you've just said, that question, I will give you a very simple example of how that will be done, if not for regulation. And I will use example of motor insurance policy, in which case an organization with large fleet of vehicles, we decide to do what we call self-insurance. An aggregator will help them put the technology together in that organization and say, okay, I want all the car owners within this organization to pay a specific form, a specific amount of money to this pool, and they will pay claim out of that pool. And you imagine that third-party insurance generally has been very profitable to the underwriters, basically because either people are not claiming or claims are a bit less compared to the volume that you have. So all you need to do is to be able to see what is the total premium that you received, what is the total claim that you received, net it off, become profitable. You can even decide, and that's what's been done by the Takaful of this world, where you will the excess now will be shared among the underwriters and the technology company or the aggregator will also have a part of it. Now that is creativity, innovation. Now, so the underwriter need to wake up. So that's really possible, because the way technology is going, the way the structure is going, if the underwriters are not awake to be able to be creative, that will come in. What's wrong in an underwriter allowing a vehicle owner, a car owner, to pay premium per use, where he only pays only when he uses the car? Now, so if that comes in, the aggregator that wants to come to disrupt, who wants to, because the nitty-gritties of running it, they are just using a generic model to be able to run such arrangement. But if the person that wants to, if you have two different products, the proposal is brought from the aggregator, another one from underwriter, and the underwriter is proposing that you will pay per use, and if you don't use the car, you don't pay. You are being fair to the client, because you take, for example, when I was in Kenya, I bought a car, the CRV. Now I park that car. I only come on quarterly basis. I park that car. I don't use that. But I was on annual basis, and my premium is the same premium with any other person that is using the car in Lagos, and that's unfair. Now, but if you're able to break it down and I pay less premium, yeah, it becomes attractive, and no disruptor will come and do something new that will be appealing to me. Because if I have somebody who gives me a proposal that makes me to pay less and reasonable to me, and the regulator allows it, I'll rather go with that person than go with underwriter. And so that's why innovation, disruption will come if the underwriter are not innovative, they are not partnering to be able to improve penetration. Thank you.
Thank you very much, sir. Thank you for your time. Thank you for taking time to answer some of our questions. We couldn't take everything, but we really appreciate your time. I'm sure that every one of us were impacted, from that session. In a few minutes' time, we'll be starting off the next session. It's the first roundtable session for this event. The roundtable session is on simplifying insurance for the emerging market, and we have a lot of amazing people on that session who are going to be discussing some things, and you don't want to miss that. So just to serve as a teaser, we are having at YA Insurance Brokers, Adeola Adebanjo, Head of Retail Solutions at AXA Mansard, Aparajit Bhattacharya, Managing Partner, InsurFirst Insurance Brokers, Dr. Ikpeme Neto, founder of Wella Health, and Dr. Tunde Salako, the convener, Africa InsurTech Rising. You definitely don't want to miss this one, and the session will start off at 11:10. This session is proudly sponsored by AXA Mansard. And will join the session shortly. Hello and welcome back. Like I said, we are having the first roundtable session, and it's going to start off in a couple of minutes. We have Mohammed Adebisi as the moderator. We have Dr. Ikwemeneto, Dr. Tunde Salako, Aparajit Bhattacharya, and Adeola Adebanjo, who are going to be panelists on that session. So at this point, I would ask that these people begin to share their video, and I would hand over to Mohammed. Mohammed.
Yeah. Good morning, Lidamala. Yeah. Good morning, everyone. Yeah, it's really nice having everyone here. This is the first of its kind in Nigeria, and I'm really happy to be a part of it. I can see Dr. Ikweme, I can see Aparajit. You're all welcome.
Thank you very much.
Yeah.
Thanks. So pleasure to be on the webinar.
Sorry?
I said thank you. Pleasure to be here.
Yeah.
Good morning, everyone. Pleasure to be here as well.
Thank you. Yeah, so hello.
Session.
Yes, sorry about that. We're waiting for Adeola, so I'm trying to have him connected.
You can go on. He will join shortly.
Okay. Okay. Yeah. So, good morning to the entire world. I know the whole world is watching us. Good morning once again. This is a special greeting from the shores of Nigeria. So my name remains Mohammed, simply Mohammed. I'll be the one moderating this event. So looking into the people that we have in this panel, I can see a whole lot of good speakers, the real expert in the house, and we're really happy to be here once again. Okay, so okay. Yes.
Sorry, I guess Mohammed is having network issues. So just to kick off the conversation, maybe just 2 minutes or 1 minute each. Each person can just introduce themselves. We'll start with Dr. Neto.
Oh, thanks so much. So my name is Neto. I'm an internal medicine physician by training. I sort of left medicine, at least the practice of clinical medicine, to build a digital health technology startup. Built a couple of products, and then just over a year ago, decided to integrate some micro insurance into the products that we build. So we now have a micro health insurance product in partnership with AXA, and that aims to cover the common conditions and common health challenges that people face, and provide them with better access to financing to reduce the dependence on out-of-pocket expenditure. So yeah, we've done that over the last year and a half, and we learned quite a bit in the process. So it's great to be able to speak with everybody here and share some of that experience. Thank you.
All right. Great. Thank you very much. So Mohammed is back, but we're doing some introduction. So next, Aparajit.
Hello, everyone. So I'm joining you guys from India. My name is Aparajit. I'm basically an insurance and InsurTech enthusiast. It's been about 20 years that I'm in the insurance business. Worked with all major big brands, even worked in Africa. I have lived and worked in Lagos for about a couple of years with Allianz Nigeria PLC. So the interest lies in creating creative and digital solutions to take insurance to the underpenetrated mass markets. And that is one of the reasons why, after coming back to India, I did not continue with my corporate career and founded an InsurTech called InsurFirst. So we work with a lot of different partners, MFIs, social help groups, as well as local level point of sale insurance agents to create simple solutions which can be easily placed in front of the customer digitally. And we have been doing this work since last about 4.5 years. And going forward, we are trying to work into other inclusive insurance programs like extended warranties for gadgets, etc. We are also working on bite-sized health insurance programs for the underserved mass markets. So these are the couple of things that we are working on currently, and I'm extremely happy and glad to be part of this panel discussion today. Thank you for having me.
Awesome. Thank you, Dr. Tunde.
Okay, good morning, distinguished ladies and gentlemen. It's a pleasure indeed to be here. And first off, congrats to the IBS team on organizing this conference. So a bit about my background. I'm foundationally a medical doctor, but I've been on the insurance side of the fence for the past 16 years. I'm the CEO and co-founder of a health InsurTech, which is called Hadil. I also double as the convener for a social impact project in the InsurTech space, which is called Africa InsurTech Rising. It's a pleasure to be here today, and I look forward to sharing thoughts with the rest of the panelists. Thank you.
Awesome, you're welcome. Adiola Adebanjo, introduce yourself.
Good morning. Name is Adiola Adebanjo, as you said. I work with AXA Mansard. I currently head the retail division of business. I've done about 15 years in the financial services sector, spanning from banking to investment and finance. And I've always been the market-facing end of the business, to customers. So that's my own strength. And we, as AXA, we have what we call the market customers, which is one of the things we're discussing today. And I'm happy to be on board. Thank you.
Awesome, thank you. So I hand over to Mohammed to go into the
Thank you. I'm fully back now.
Deliberation.
Yes. Yeah. So since we have everyone, we've all everyone introduced themselves. So I'll just go straight to the discussion today. Now, one of the things, the topic here today is actually simplifying insurance for the emerging markets. So everything we'll be discussing here will be about simplicity and also looking into the emerging markets and how insurance can actually be the bridge to cover those gaps. Now, for Dr. Ikpeme and Adiola Adebanjo, I think I would like to throw this question to you first. there is a very innovative product from Wella Health that we can see in the market now, the popular malaria insurance, which goes for as low as 450 naira per month. How did these two companies come together to bring about this product? Because the reason why we're starting with this is because we understand that simplicity is very important in insurance. When it comes to digital transformation, simplicity is a key thing. So for these two companies to be able to come together and create something for the masses, because that is where the real, the grassroots is the target. So for them to be able to come together and create this, we need you to quickly brief us about the beginning and where you are and where you are going. Thank you. So Dr. Ikpeme first, please.
Okay, thanks for that. And so AXA's emerging customers team have been a wonderful partner. We got introduced some time ago, and it was great to see the insights, and the desire they had for providing products that met the need of the emerging customer, right? And so I think there was an understanding of the limitations of the existing insurance products, and I think that's always a great place to start. I find that and I think it's important to actually highlight this, that having a dedicated emerging customers team within AXA makes a huge difference, because they were willing to kind of think a bit outside the box and accept that the traditional way that insurance has been sold and developed may not really work for the vast majority of the population. Because as we know, insurance is very underpenetrated, and that's not for a lack of insurance companies. So I think, first of all, even just the way that team is set up and the insights that live within that team, was the first, great sign. And then, because they had that insight, it was very easy then to, start having that conversation around understanding the needs of the customers, and so, we've done some initial work, surveying customers and, actually testing some, products. We had done some of that work, independently, and they had also done that work, just doing the research. So I think one thing that we mutually shared was that, feel for the customer, not assuming that we understand the customers, but actually going out into the real world, to speak to customers, survey them and understand where the challenges were. And so when we compared notes, we found that, we kind of really, saw the same things, that we needed to look after the common condition that people were, spending money on, at least as a bridge to, building trust, exposing them to, a different way of thinking about paying for their healthcare, and then over time, progressing them along to paying some more. Because I think the challenge is not even so much that, say low-income people don't have insurance. It's even say middle-income people that could potentially afford it, even they don't have insurance. And I think sometimes that's really a trust and education problem. And I think, with the emerging customer team in AXA, we're certainly, in a position now to start to understand that customer segment and provide products for them. Thank you.
Thank you. Yeah. Adiola.
So, just to speak more to what I said, and I'll take it a bit further. Typically, what you need to do is always try and leverage on partnerships and try and find, the strength of the ecosystem. So what you see is the first case of, or perhaps a unique case of partnership coming together to bring cost insurance to the consumers. Now, if you check one of the final reports, I think at the survey they did, they mentioned that 72% of the people they actually did in that, conducted that survey had awareness as the major reason why they're not patronizing insurance. Now, you would find out that everybody has their strengths and competitive advantages. So what is important is for you to look for unique partners that have competitive advantage and strengths in certain areas, and ensure you can create the right value for the customers. I think that's what we've just done here as partners. Of course, we have a team. And of course, the team can't do it all by themselves, and find what the partners to put the products out in the way we put them out. We just only leverage on what works and the language and the manner that target market, that's very accessible to that target market and can appreciate. So the traditional means to work for some traditional insurance products, but again, you need to find what works for what.
Okay. Yeah. Thank you so much. Moving to the next, we should be looking at the areas that talks about collaboration and partnership, because that's a key thing. When Dr. Nato and Adiola, when they were talking, they were critically talking about collaborations and partnerships. So when it comes to partnerships, now for the insurance industry, we all understand that NICOM, that's our regulators, they have a huge role to play when it comes to partnerships. Now, the current challenges that is being faced in the industry is all about getting NICOM to sign, to bring the guidelines that actually guides web aggregators and other innovative value chain partners into the ecosystem. Now, my question to the panelists here is, how do we get the regulators to buy into these ideas, to buy into these innovative ideas? Dr. Tunde Salako, being a medical doctor and moving into the InsurTech, you are the founder of InsurTech Horizon. So I know you're doing a lot within that area. How are you bringing the entire, the ecosystem players into one to actually ensure that we're able to achieve something?
Okay, thanks very much, Mr. Mohammed. I think that's a very pertinent question, and it's a function of going back to the foundation, and let's examine what is the foundational, definition of regulation, right? So, regulation is key. It's important. It's something that has to be put into place for every industry, and we have to give kudos to NICOM and other regulatory bodies within the insurance space on the steps which they're taking. Additionally, for me, from my own perspective, the critical things that need to be done is seeing how we can deepen that, should I say, for better choice of words, inclusivity. And when I say inclusivity, I'm not talking about now products reaching the end users. I'm saying carrying all the stakeholders within this ecosystem along in a way that everyone is able to contribute their own quota to improving, galvanizing, and leapfrogging the insurance space to what it's actually meant to be. There are a lot of things that can happen between 2020 and 2021, right? And if we look at it critically, the year of the COVID 2020 has actually accelerated a lot of solutions and products which are technology driven. And so, to summarize it, I think the first critical step will be to establish an innovation sandbox, right, which can pull everyone, within the ecosystem together. Innovation sandboxes are already happening in other parts of Africa. For instance, particularly within the InsurTech space, it's happening in Kenya, right? And while they're also taking one step at a time, I think we can emulate that and try and build a sandbox that will pull different innovations for stakeholders within the ecosystem together. There was a hackathon that happened sometime last year in July, and you'll be amazed at the kind of solutions that people had come up with, from the ideation to the seed to a very well developed stage, that were tackling tackling insurance real life scenarios, right? And so if we emulate what's also happening within the fintech space, where there is a sandbox in Nigeria that is pulling all the startups and ecosystem players together, innovators, I think the first thing we should be looking at is how can we establish a sandbox that can foster innovation, leapfrog creativity, and at the end of the day, build the system to what it should be. I'll stop there for now.
Okay. Yeah, thank you. So, Aparajit, you are the most important, you're a critical person in this panel, because the reason why I'm bringing that up is because I know a few years ago, you worked with Allianz, and you were the chief retail officer. So what was the challenge within the industry trying to sell the retail products to the average Nigerian out there? For a global company coming into Nigeria and trying as much as possible to create that penetration, we all understand what the penetration level looks like in Nigeria. So what was your challenge, and how were you able to resolve that and what is your company? I know you currently own your company now in India. So what is your company also trying as much as possible to do within the global landscape to improve that? Yes. Thank you.
Challenge in Nigeria is that everybody wants to underwrite oil and gas. Nobody wants to take insurance to the mass market. That's a very big challenge. While my exciting stay in that country, and of course, I consider myself as a Lagosian, it's like my second home. I have been to the various markets. You just name it, Oshodi and everywhere else. What really struck me are the basic things like, the fires in the markets. People who live in Lagos, all of us, we all know the market fires, right? But unfortunately, you will find that those kind of products are totally missing. Those risks, nobody wants to underwrite because there's a fear, the fear of God. I mean, my God, what will happen and stuff like that. But it's not that dire a situation that we kind of continue to look at. There's a lot of things to be done, to be very honest, in Nigeria. For example, let me give you an example. Let us forget the the vulnerable section of the society. Let us talk about people like you and me. In India, Amazon has started selling insurance. So you just go to the Amazon website. There's something called an Amazon Pay. Through Amazon Pay, you can buy your motor insurance, your health insurance, your car insurance, so on and so forth. I wonder what is stopping Jumia and Konga to do the same. I don't understand why Jumia and Konga is still not embedding insurance into the system. And I do not know why the big players, we have a colleague from Ansar, AXA and all, are not backing such programs. So I think a lot of discussion needs to happen in terms of enabling this kind of ecosystems. It's not just about regulations. I can assure you, when I dealt with some of the people in the regulator in NICOM in Abuja, I found them to be very, very amicable gentlemen. It's not that they do not understand or they do not want to take decisions and stuff like that. It is just that, there needs to be a industry representation first. What I mean by that is, if you do not create a core representation team, which will talk to the regulators, urging them about the importance of bringing regulations like, online aggregation platforms, web aggregators and stuff like that, and you do not build a business case, they have 1,001 different things to attend to, right? So naturally the priority gets lost somewhere. That's one. Secondly, coming to the very, very big opportunity in Nigeria is clearly microinsurance. And microinsurance is something, it's not new to Nigeria, but the existing regulations really needs a overall change when we have to involve people who are the Generation Z, as we call them, people who are born in the 1990s and later. Probably their window to the world is their smartphone. So therefore, if you want to transact an insurance contract with them, you will have to basically go mobile to do that. What I mean to say is that, mobility insurance, ride-sharing insurance, gadget protection, extended warranty, completely missing from the Nigerian markets. And I do not know why. So these are the things that we need to ask ourselves. We are still talking about the basics. I mean, endowment savings plan and funeral expenses and term life, etc., etc. But why are we not talking about gadget insurance programs? Why are we not talking about extended warranties? To give you a live example, Zhong'an, the Chinese digital insurer, we all talk about it, we all know about it. I think currently there's a sale going on, right? What we call is what we call Black Friday sale, right? Typically in this kind of events, Zhong'an underwrites 200 million, 300 million policies in a day. So it's not about technology. I mean, technology is, of course, yes, cloud-based API infrastructure, blah, blah, blah. But the point is, what does Zhong'an sales? Zhong'an's main sale is parcel return policies. People who buy stuff from Konga and Jumia, and then there's a return, so you create those parcel return policies. You create extended warranty policies. and stuff like that. These are the main things which moves in this organ platform, more than health insurance. And health insurance also, they have just recently launched. So we need to figure out and understand that, yes, there are two segments. One is the underprivileged and underserved market, people who are living below subsistence, and how we can help them and support them. Of course, that needs to be a big program, and including government support, etc., needs to come in for crop insurance or for hospicash or health insurance programs in micro insurance space. But that is already there. It's already present there in Nigeria. What is missing are these digital products and these platforms. I think this is something which can really, really be a huge, huge market going forward, if you guys form a representation and take it to NICOM for approval.
Okay. Yeah. Thank you so much, Aparajit. You've really spoken a whole lot about a lot of things that we've been looking into, a lot of things that are quite evolving. And things that a lot of underwriters are actually battling with. Because, so if we look into, now there is something important that we really need to look at. There are some key points that I've been able to pick from each and everyone's contribution. We've been able to talk about creative awareness of insurance products. We've been able to talk about the fear of an average Nigerian when it comes to buying insurance products. And we are also talking about trust when it comes to the insurance industry. So this brings us to the issue of claims. How do we tackle issue of claims? Because the reason why I'm bringing this, because when we're trying to simplify products, we are basically talking about using digital technology to actually simplify all our processes. When it comes to the product, underwriting, claims, and customer experience and engagement. So we are basically talking about an hand-to-hand process. So how do we tackle the issue of claims in the industry? Adio, I think I'll really appreciate if Adiola and Neto can actually tackle this, because they are dealing with the grassroots right now. So we need them to take this up, please.
Okay, thanks, Mohammed. Yes. And I'll just touch on one of the things we've done with emerging customers. So one of the things we identify when we talk about claims, if you take, for instance, we created what we call enhanced credit. Typically, what happens in the traditional insurance, when a lender lends out to a borrower, the lender is often concerned. They focus always about the lender most of the time. Protect the lender, and then the question is, who is protecting the borrower, right? So one of the things we've tried to do, what we call enhanced credit, is to cater for both the lender and the borrower. And what do I mean by this? At that level, should anything happen to the borrower, we have products that, of course, at micro level, these are not commercial, really large commercial credits, but really large, small at that level, at the subsistence level. There are products that would not only cater for the installments, but also, give some payout, some compensation to the borrower, who have probably suffered some unfortunate incident beyond, his control, some unfortunate circumstances, has hindered this person's ability to service that facility. That the kind of policy we created helps, to meet that obligation on behalf of that borrower, as well as also, give some compensation to the borrower, so that at both sides we're playing. And these are done with very little simple. And I'm going to take you back a bit to what the last speaker just said with respect to regulation and a few other things. I think everything is linked, both from the back end to the front end. You want to be able to ascertain the person you're giving insurance to. You also want to be able to, verify incidents when they happen. If there are a lot more synergy, perhaps between players, what we find today that everybody is running in cycles. You give same information to the banks, you give same information to the insurance companies, you give same information for your driver's license, you give same information for your international passport. All same information, same Mohammed everywhere, same fingerprint, same date of birth. Now, if these things can't be shared, ascertaining, identity of people and ability to set the claim is a lot faster. What you find out is that so many loopholes, and people try to do some due care. Is why you find a bit of delay around issues. But for the margin customers, what we try to do, because looking at the scale of businesses, we've simplified things a lot more. Very little documents, even confirmation from key parties, as to whether this actually happened. Did someone really pass away? Someone says, yes, I was officiating minister. I mean, those are easy enough to settle such. We are not talking about very significant numbers. But when you come back to traditional insurance, where you are now talking of sizable and reasonable volumes of risk and settlement, you find out that a bit more needs to be done in during the due care that is required of people as a business. But I mean, taking it back is to have perhaps central points where players can, and then a lot of clients where you have seen these things work very well. And perhaps it's just a unique identifier where you have social security numbers. So you would even want to make a claim, you just put in your social security number, and all the background checks can be done. Police reports, medical reports, everything can be ascertained at the click of the button. So, because there's a centralized place where data is shared. What you find now is virtually everyone is, accumulating data, trying to gather their own data. But if you put all these things in a centralized, and that you have that backbone, it's a lot easier for people to administer some of these claims. And things have moved. The regulators are there. There's a lot more consumer awareness and rights, and where you even have social media. That wasn't there traditionally in the past. Now, and the blog used to say, no, I have this claim and all that. And there's more social responsibility on the part of players also. A lot of reputational issues. People are trying to also ensure that we win the trust of people, where things are not done and things are escalated, people address it. I mean, I can say that for the industry. There's been a lot of improvement. But I think if data is more available, if there's the infrastructure backbone, for people to share a lot more information, we will see a better claim process being experienced by customers.
Thank you so much, Adeola. Yeah. So before we round up the session, Dr. Tunde,
I just wanted to add in there really quickly on the claim side.
Thank you.
So it's when we talk about claims, that's when me and my insurance colleagues depart. We often don't see eye to eye. Because
I'm really sorry. I was actually looking at the time. I really wanted you to talk about the claims aspect.
Yes,
really.
No. So that's where I depart from a lot of traditional insurance people. Because when insurers pay claims, they call it a loss ratio. What business exists where when you do what you promise to do, you call it a loss. So I think there is a fundamental mindset that kind of breeds a mistrust, right, in the minds of the customer. And I think that we are in a setting where we need to build that trust. We need to educate the market, and we need insurers to invest in doing that by just simply paying claims. The proof of the pudding is in the eating. We need to remove every barrier that prevents people from accessing these things. Because I mean, like we think about fraud and all these other challenges. I think the bigger problem is that the market isn't really big enough, and the only way we can get the market to be big is by investing in that market and paying out claims. I think microinsurance is a great opportunity because our exposure is capped. We know what we're going to pay, and so when you have that, and we have the digital tools now to enable these things to happen, I think the attitude needs to be, let's just pay claims, let's grow the market, and then over time we can then put in the controls we need around fraud and things like that. If you look to the US, for example, Lemonade recently IPO'd. Their loss ratio started out at somewhere around 150%. If I take that to your average Nigerian insurer, they say, no. But you have to invest in the market. There's no way around
markets.
But there's no way around it. If we want to grow the market, we have to invest. We want to reap when we don't plant. I think it's important that we have that mindset of planting by paying claims and building trust. Thanks.
Yeah. Okay. Thank you. Yeah. So a quick one, Dr. Tunde. I know you have a new product in the market. Well, it's not new. I mean, the product has been out for some few months now. I mean, the COVID pandemic, it has really hit us really badly. I mean, globally. I mean, so I know you have a product called Symptoms Checker. and COVID-19 is one of those products. How have you designed the product's journey? And also, I mean, looking into the customer journey, how do you think you've been able to capture this products in such a way that it will be so unique to the average Nigerian and the market?
Thank you, Mr. Mohammed. I think so. One of the things that we did fundamentally was not to try to reinvent the wheel. It was really about just leveraging on what was currently existing, right? So when this broke out, we wanted to just bring something different to the Pan-African markets, for better choice of words. We wanted something that will resonate for African usage. And why do I say that? So a lot of checkers, a lot of questionnaires and all sorts were flying around when the COVID period really just ramped up around middle of March. And so what we just did was we liaised with an international partner who already had a solution going, and we embedded their API to our own backend and basically just tweaked the questionnaires and the way the symptoms were being assessed to our own geographical and demographic location. So where when you will cross to Europe, you would find certain non-communicable diseases you don't find in the tropics in sub-Saharan Africa. We basically just looked at that back and worked with that team, their own design team, to tweak and geolocalize our own symptoms. And of course, when it came to the COVID, I mean, that was a general use case. Everybody was facing the same thing. So basically what we just did was we just embedded our APIs together, and we were working with the mindset of, okay, how would we bring something that was a little bit different, which was artificially intelligently driven, as opposed to just ticking the box and asking questions and then working with them, coding that was working on algorithms. So we partnered with some guys called Medictor. They're using grade A stuff. Their tech is really, really deep on machine learning and artificial intelligence. We embedded that to the back end, and we found out that it was more intuitive. Intuitive in the sense that when you answer the question, it took you directly to focus and delve deeper on that symptom which you were experiencing. And between March and the end of, should I say, July, we saw a very high ramp up on the people who were, because it was free. We didn't charge for it or anything. We just wanted that, that kind of solution to be in the market. And so moving forward, we're trying to now go end to end to see how we can also now deepen that symptom checker to work for other diseases, not only COVID. So we got a good response in that regard, but we're looking at how we can deepen the markets with other differential diagnosis moving forward. Thank you.
Yeah, thank you so much. In Nigeria, there's a popular saying that you don't go to the farm, I mean, with your hoe and your cutlasses and all, and you find no farm to actually work on. So the major reasons why we are here, I mean, is because of our audience. So Adedamola, please, I would really appreciate if you can pick one or two questions from the audience so we can treat it.
Thank you very much. Interesting session so far. I mean, I think a lot of people like Dr. Neto's statement recently. I knew that was going to be an interesting one because we've had the conversation before and it was quite interesting. So, there's a question here. So this is for Dr. Tunde. So it's asking about sandboxes in the insurance industry. So if Dr. Tunde can just speak a bit about, sandboxes and the role they can play in, growing innovation.
Okay, thank you, Adedamola. So the terminology is just it's just how would I put it? It's just a term that is used to describe an ecosystem where innovation is being fostered, where it's being deliberately grown, where certain solutions and products are being darted at the wall and responses are being gotten so that it is perfected before it's taken to the public. And so you would have things like beta testing, you would have market product fit valuations and all that inside a sandbox. So there's something currently existing in Kenya, which started July this year specifically, and it's been It's an initiative that was driven by the Insurance Regulatory Authority of Kenya. What they just basically did was they tried to extend it so that it can complement what the current the insurance regulator is currently doing in Kenya. So that's existing. And then in Nigeria, there's something for the fintech ecosystem that actually exists. It's still it keeps evolving. It's a fantastic way of just pulling all together every startup in the ecosystem, every solution, every ideation, to build it, develop it, bulletproof it, and then push it out into the markets. Thank you.
Awesome. Yeah. Thank you. Thank you very much. Thank you very much. Our time is fast spent. It was a very interesting session, and really appreciate everyone on this panel: Mohammed, Dr. Neto, Dr. Tunde, Adeola, Aparajit. Thank you. I'm sure that everyone on this call definitely enjoyed this. I did, and we definitely energized towards doing something and not just sitting back, because there are a lot of things that can be done. And so thank you very much.
Thank you so much. I'll say one last thing: pay claims. Just pay claims.
Okay. Any takeaway from Aparajit, please?
Yeah, thank you very much. I think it was extremely interesting discussion that we had. And I also second this thought: we need to pay claims.
Yeah, thank you. Adeola.
Thank you very much. Yeah.
Oh, thanks for having me. And we're paying the claims, and we'll keep paying the claims, if I can say so.
Okay. Dr. Tunde.
Thanks, everyone. It's fantastic to be here today. Let's keep growing the space. Let's keep throwing things at the wall. Let's see which ones will stick. Let's foster innovation. Thank you.
Yeah, that's the key word. Thank you so much, everyone. Really appreciate you. We just appreciate. I mean, we are really loving it, and we believe this is just one of its kinds, and a lot will still come. Thank you.
Thank you.
Yeah, thanks. Thanks a lot.
All right, thank you very much. That was the first roundtable session for this conference. You agree with me that that was 101%, and we're just getting started, right? So we're going to be having a fireside chat next, and it's going to be featuring Henry Mascot, who is co-founder of Curacell, and Rashidat Adebisi, who is Chief Client Officer at AXA Mansard. So we're going to be joining that session in about 4 minutes. So stick around, and yeah.
Hello, sir. How you doing, sir? Come on.
Hi, Henry. So good day, everyone. Welcome to this fireside chat on InsurTech Business Series Conference. And like I said earlier, this is going to be involving a conversation with Rashidat Adebisi, who is Chief Client Officer at AXA Mansard, one of the leading insurance companies in Nigeria, and Henry Mascott, who is co-founder of Curacell, and an InsurTech startup. And so we're going to be delving a bit into something that they are doing, and I mean the industry as it is. And so, welcome, Henry.
Thank you very much, Damo. Thank you very much. It's a pleasure to be here.
Awesome. Hi, Rashidat.
Hi, thank you very much. Great to be here and nice to meet you, Henry. And hi, Damola.
Nice to meet you.
Awesome. I'm looking forward to a very interesting conversation. And to start off with, I like to know people. I like to meet people, right? So, Rashidat, in as short as possible, how did you come into the insurance space?
Very, very, very interesting. I don't think we have enough time to actually have that fun conversation for it to be fun enough, right? But to be clear, I think insurance for me has been around the ability to impact people and how it really was. Perhaps my closest first stint with insurance was, I briefly worked for a company called Churchill Insurance, somewhere in the UK. And, I just got interested in how realistic it was. And moving back to Nigeria, when I found an opportunity to work with a certain company called Guarantee Trust Assurance, it wasn't definitely the highest pay, I would say to you, but it seemed to have the most interesting offering. And this impacts to practice my own core. I'm a business accountant for my first degree. And, just do something interesting in insurance was just a great proposition. So got into insurance, started working with AXA in 2005. And over time, I've worked within finance, led finance, and then been involved in the business, moved into trying to grow, the penetration and protection of people, you and I, people on the streets, not just large corporates that we tend to see more of. And so this proposition is still exciting when we consider, the country's penetration rate, the amount of insured people versus the possibility, and then versus who really needs protection. So this is, perhaps something very close to my heart. So I believe that insurance is a noble profession, by the way. It's not always easy for you to be able to make a living and still impact people's lives. So this combination just makes it super exciting for me. Thank you.
Great, that's awesome. Henry.
Thank you very much. So how did I get into the insurance space? So again, because we're solely first of all, sort of like a technology company. We did initially start out in healthcare. We're still in healthcare, health insurance, but our first product was purely focused in terms of like digital transformation in the healthcare space. And then during the process, we also found out that it was really hard for you to grow, the healthcare market if there's no healthcare financing, right? So which is the part that insurance plays, right? So because it acts as that financier in the ecosystem, which is pretty much how we get it. How I got into insurance. But my background is in product. I'm a product guy. I'm a technology guy. Worked in a few tech companies before deciding to start out Curacell. And I echo Rashidat's sentiment a lot. So for us right now, when we look at our mission with what we're doing with our product Curacell, it is really to help drive inclusion on the continent, because we feel that risk protection, which is what insurance is something everybody needs to have. It's something that we need to figure out how to, we already live in a country where a lot of people are poor. So it means the little they have, we have to find a way to protect it for them. Because, if I always give an example of a middle-class family, is one health crisis away from bankruptcy, right? So a father who makes $100,000 and then like has an accident and has to use all his life savings to take care of that. That's pretty much that for his kids' school fees for the next couple of years, right? So for us, it's very, very important to us that we figure out a way to sort of like get covered for a lot more people. Whilst our current product is still around sort of like efficiency and productivity and cost savings, our passion really is to partner with the incumbents to figure out how to scale the market.
That's great. Great to hear that. I'm going to start with you, Henry. I know that Curacell, they play especially in the claims area. So in the last session, it really just ended with a lot of the panelists just saying pay claims. Rashidat, I'm not tackling you now, but that's what the market is saying, right?
We accept.
Okay, that's awesome. That's awesome. So, Henry, playing in that area, how important is it for insurance companies to actually pay claims, not just for the sake of paying, but easier payment of claims and faster payment of claims? Because those are some of the challenges that we are having. So it's not like insurance companies are not paying claims, but it almost takes too long. Weeks. And so how can technology can go a long way, but how important can that whole thing play?
No, because you see being able to pay claims is very important from a user experience perspective, right? Because we're a player in the claims sort of like value chain, there's a lot of things we do on that value chain from making it a lot more efficient. So if, for instance, with our current sort of like where we're playing, if like a provider submits a claim to a health aid or medical aid or a HMO, and then it takes them months before they can even get through with the paperwork, so that's mad, right? That's crazy. So there's a part where you can drive a lot more efficiency where people can be paid. But I think what you hear a lot of people saying is, first of all, there has to be a mindset that to be able to grow this market, you need to just show people that I want you to get value, right? I'm not because I guess what a lot of people say is insurance companies are always witch hunting. So you submit a claim, they try to scrutinize it, try to make sure that you don't get as much as you. So again, I hear the sentiment, right? In this market where there's very little penetration, you probably need to try to get people to trust you more before. So yeah, you need to get people to trust you more. So spend less time trying to scrutinize and, accuse people of trying to be fraudulent or all that. Just pay them, right? So that they can refer, right? So I guess right now, I wonder what the NPS, that's the net promoter score for insurance companies are, right? If I have an insurance product, would I necessarily say to my friend or to my family, you should use this insurer because, they're always, So there's, first of all, that mindset that insurers, you just need to focus on the user experience. How does the user perceive you, right? I feel that is, for us, we're on the other side, which is, first of all, you've solved your user experience, but when you're now like, I want to, let's check this thing. That's where we come into play. But I would really do say that, yes, that I wouldn't necessarily say that we would support that, be a witch hunter, try as much as you can not to pay people. But again, I engage with a lot of insurance companies. So we have a health product. We currently have an auto product in the offering as well. So engaging with a lot of the insurers, you also hear that they're thinking, some of them, I wouldn't say it's all of them, they're starting to have this mindset, which is, customer experience is the best thing for us. So whilst we know, yes, there might be a bit of fraud, but let's just try to make them have a good experience. Yeah.
Okay. So Rashidat, a lot of things has to do with the experience. Claims is very important when you are looking at the customer experience. That's the reason why I bought it 9 months
the first instance,
right? So, and that is still an issue in the market. companies in Nigeria are doing a lot of work in that space. So can you talk a bit about what you guys are doing, or what's your take about the whole claims? And I mean, just beyond just claims, the experience, really, like Henry said.
This is definitely a very, very important topic. So I'm not surprised that it came up as a big deal. And I saw a chat just pop up and the person said, if insurance companies will pay claims, I totally agree. Of course, there's some fundamental issues that affects the ability for some of the companies to pay claims. I mean, as Henry said, we are a company that we're monitoring our NPS constantly, looking at the different moments of truths, trying to see that, at the adjustment level, at the submission level, in the payment level, what are we doing? How are we doing things differently? But, many companies have to balance this with proper pricing. So when I come back to the foundation and fundamentals of insurance, which is risk management and pricing, we haven't always necessarily, or we're not in the industry necessarily focusing on the fundamentals. We're only just seeing more actuaries, much more better focus on the risk pricing methodology. Because if you price properly and you've collected the appropriate, risk margins, if you say in that way, then it wouldn't put you under so much pressure to pay claims. In fact, you want to pay quickly so you can get more. But the industry has gone through a phase. When it started, from people I've spoken to, I wasn't there, but I mean, people I've spoken to have told me how, how they used to challenge each other, how, when a client moves from another customer, they will call the customer, the former company and say, please, can you confirm this client was with you? What was their loss ratio? So that the client didn't just move from one company to the other with one terrible loss ratio, then get a very low price in another company. But all those things don't happen as much anymore. So you end up having very high level of competition and people just offering things based on who's going to give me the cheapest. And you can't blame a customer, right? Insurance is a commodity. They want what the best price is. Unfortunately, when we don't match that price with the offering and what is covered, and then that disclosure on what does this price cover, I believe has also affected us. And if we then address, these fundamentals so that pricing is being done appropriately, people who are good risks or based on age, experience, areas are being priced appropriately, then we have a better pooling and a fairer structure, which will then positively impact the payment of claims. So I think that's the first step, the fundamentals. The second one, of course, is, like Henry said, the mindset. We must understand how important this is. In AXA, one of our key values is customer first, right? And so a lot of all the evolution we're doing is to say, how do we serve the customers better? And I can tell you, even we have to convince our people internally to say, look, yes, we understand that it's underwriting, but first, the customer didn't know this when he was starting. And so we have sessions now where we're saying to ourselves, can we do it better? So we had to set up, a customer analytics team who is now tracking our NPS, looking at, the complaints, working on it to see how we can, truly improve those things. So when we price, when we give them the policy documents, many people don't read, right? They like to say that, hide something in a book from Africans. We even try to simplify it by putting things like, those complex issues on the forms, but customers still don't get it. And I don't blame them. We're just too technical. We need to be simpler as an industry. So the simplicity would help us. So if we address this and people are clearer and they are being told this is what is covered today, you'll be surprised that there's some fire policies that doesn't cover certain type of electrical or maybe, lightning, sort of like coverage. And it's pricing. So the culture hasn't been to do this so much. Why? We've traditionally supported corporate organizations who could have brokers, and the brokers are, helping their clients to manage those risks. But the brokers can't do 200 million people. They need to be able to understand what their own volume and margins are. And so we can be better as an industry addressing this. So I believe that if we fix the fundamentals, if we work on this experience that we've spoken about, and we all keep, having that mindset to say, can we make it better? We will definitely create a better claims experience. There are many companies who are paying claims. When I first started, maybe 15 odd years ago, that sounds so old, right? But, it was about, we used to compete on the basis of we pay claims. But I don't believe that we pay claims is a basis of competition as much for many players anymore. It's about how quickly and do we pay it on time? Or do I say to you, what time did you have the claim? You had it at 12:01. You are not covered between 12 o'clock and 12:15. People don't like that. And that's why I guess maybe Henry's point of saying that we're picking on specific things, like we're just trying to reach out to you first. So I think I'll stop here so we can take more conversations.
That's awesome. So I'm sticking with you now. So an EFINA report from 2018 mentions lack of products and institutional exclusions as some of the barriers to financial inclusion in Nigeria, especially insurance, right? how do we tackle this as an industry, looking at the various stakeholders, that we have in the market, from your point of view as AXA and you personally?
Well, honestly, I'm sure if everybody knew the secret answer to that, right, we wouldn't be having all these conversations. But I will just try and posit some of my own thoughts, and my first thoughts are that, when you have well-capitalized companies, and that's where the recapitalization comes in, and you have, the right funding, and your shareholders are holding you accountable, then you are driving not just your typical, transactions, but you're seeking to see how can you keep improving your service offering. This will ultimately help us in reaching out to clients and thinking about them. But maybe we'll say 3 key things. We need to listen to the customers a whole lot more. The industry has designed a lot of its products based on what they have and what they believe they can do and what has been approved by the regulator. We're not necessarily trying to do what the clients want. And why? Sometimes a bit complex. And I appreciate it. And it's not because, you can truly make everything super simple. But how can we be complex in ourselves because we're really a legal contract and still be simple to the customers? So if the industry can work a little bit better to listen to clients, and we had to do this a lot. I mean, we launched a product where you could, insure daily, with a particular telecom company. And, it was going quite well. It was more simple. We tried to improve the experience, very quick and all. And guess what? We got a lot of regulatory issues, first from our regulator, then from the, central bank, and saying that, look, you are creating an alternative currency. Then we got something from NCC, then everything was shut down. And we're saying we want to improve on it. So I believe the ability to create sandboxes and test and run these things, working together with regulators, will make a big difference for us in the industry. I mean, I've been a very, very key advocate for this. I've probably been at many, EFINA sessions just talking about this to say, look, let's work on it together. Let's go through a sandbox approach. Don't shut down everything. So if we're able to do this, listen, create new ways of testing these solutions without a lot of all the regulatory, sort of like situations, it would definitely make a big difference for us. The other thing, of course, would be investing in, new solutions to help us. You need to be more cost effective, right? When you're going to, a larger part of the market, not our typical sort of like broker-led or relationship-led large corporates that we're used to, where you get, a big check from one client. If you want to get small checks from small clients, you need to be able to walk through this. We've in AXA tried to work on, a methodology we call phygital, where we're using digital to enhance physical. And why? Nigerians still want to see somebody. They want to talk to you. They want to know your address, so they know where they're going to go and complain. They tell me you're a fully digital company. They say, where is their office? So that mindset is still there, but we can use digital to enhance that. So using new technology, digital tools to sort of enhance, I guess, what some people are doing already will be extremely useful. Finding ways to, use, things like geolocation, things of this nature to better help us to understand the risk in areas without having to get somebody go there and physically incur the cost of going there. So how can we use what we have to do this? I believe that would be very helpful. But then I like to say that there's a need for co-optation, and I'll stop on this third point. Co-optation in the sense that the industry is still largely focused on, we're competing against each other. We need to work together. We need to collaborate. I'm a collaborator by nature, but, they talk about and tell us that the fourth industrial revolution is all about what, partnerships and collaboration. So there is a need for us to collaborate as an industry. If we're able to do this, we can cut the cost of certain things that have held us back. We can find better methods of serving the clients, i.e., claims, methodologies that can help, that can really be of use. Give a simple example is that how many car repair garages do we all know? We know Brother Shegun, Mr. Kunle, Mr. Fatai, who are the ones that are repairing the cars by the side. And these are probably good, but can they really serve us the way we want? Can we take up and invest in that infrastructure, the infrastructure that serves us as an industry to service even the basic motor claims? That could make a big difference for everyone in the industry while everyone is still improving their own user experience, their own offering. I think these things could be very useful, but we're talking about individuals in the long run. And so tech is extremely important in this conversation, but we must also work with our regulators because regulators have always, sort of like been concerned in the past. Thanks.
Okay, all right. That's power packed. Digital co-opetition. So Henry, a product guy, and we're talking about more sustainable insurance inclusion. What two fundamentals do you think has to be there when designing products, or looking at the products that we have already?
Yeah. So again,
creating new ones afresh. What fundamentals should be there?
Yeah.
Can you hear me?
Yeah, I can hear you. There's a bit of lag on your end, but I can hear you now. Can you hear me? So I think
yes.
So we're starting to learn the industry, right? Which is, again, we are not our background is not really insurance. Our background is in product. We do have members of a team who have extensive years of experience in the insurance industry that we've had to bring in. But when we look at it when we look at the market right now, we think, because fundamentally when you look at the future, the sort of like the history of insurance was first of all a B2B product, right? And then it was as an upper class product. We are not, we're largely sort of like a poor country. We're very, so the way insurance works is not really designed for sort of like, the kind of country we are, which is why when you look at poor countries, they're mostly the ones who have very low penetration, right? So when you look at rich countries, they do have insurance, right? Because insurance is not really designed for poor people. So we have to, it requires very different. Again, this is why it's very, really, really hard for traditional incumbents to figure it out. It requires, and I have to give it to AXA, right? I would say that they are very innovative, right, in the way they think. But it requires a lot of innovation and new thinking, because most of these models don't exist anywhere else, right? Because if you look at if you look at insurance, the way you are doing it now, you're probably copying a lot of what exists. It's easy to say, okay, I know how it works. Okay, let's sell to corporates. That exists everywhere else in the world. But when you're looking at how you can figure out how to get to the person who earns less than $1 a day and you want to insure them, then it requires like totally different types of products, right? I was in a conversation, I think last week on Clubhouse, and people were talking about, if you're trying to look at insurance, like maybe especially for the sort of like bottom of the pyramid, then you have to think about it from the way they think about it. These guys are probably farmers or something, right? So, and they were talking about, this particular person in the conversation was saying, these guys work very different from the way we work. They don't keep money in the bank because there's no value for them to keep money in the bank. They store most of their produce as like farm products in the, and it was explaining something around the way their circles work. So these guys farm and then they keep the produce for a while, so they can, get sort of like better pricing. So they don't have cash, so they can't buy insurance products with cash. So it requires, when I think about it, for us, we know that there's a different kind. We don't know what the answer is. Like Rashidat said in the beginning, if anybody knows what the answer is, then we wouldn't be at 3% penetration in Africa, right? So, but thinking about it, we just do know that it has to be different because we're working with a totally different demographics. And again, with regulators need to be really, again, that's the problem with regulators are a big player, right? They're big, sort of like the policies. One policy can literally change the way the industry works. So I don't know who's lobbying the regulators and all that, but I would think, first of all, I would say that it's changing the way we think about the market we're serving, because it's very different from anything else all over the world. So it has to be totally different thinking, new, ground up. We have to look at what is important to them. It's probably not what is important to us. They're not doing car, they don't have cars. So it's not more auto insurance products, right? So it's something that is, I was looking at Dr. Ola's statistics of about 150 or 150-ish million Nigerians are classified from ultra poor to survivors, right? So these guys are not worried about car, right? So it's not a car insurance product that would get into the market. So we have to think about what is important to people. That's number one. And then we have to get our regulators to be helpful.
Great. So there was a question earlier in the day during one of the previous sessions, but we were not able to take it. It was directed towards after it was mentioned. So I want to pose it to Rashidat. If you can share some information about it and maybe give us any insights that you have. So the question is asking about current status about telcos as aggregators, and you mentioned that the collaboration between Airtel and AXA, if that is still on, or I mean,
well, it was,
as aggregators.
so, I mean, this is still a very topical issue, by the way. So I'll try my best not to get myself into any regulatory faux pas today. But overall, what it is that the NCC hasn't fully lifted the view that the telcos should not sell insurance. So there's a standing sort of like principle from NCC that says they should not sell. But right now, though, they do have a methodology by which you can use the platforms as anybody else can use the platforms that they are working on. But I'm not sure it's really live everywhere yet. I'm not sure all the players are doing that. We worked with MTN in the first stage. Airtel also had a solution with another insurance company, and those solutions were pushed on the table. So from our regulator NICOM side, they are saying that they wouldn't mind you using an aggregator, but they want to understand what your agreements are, what you're selling, who's carrying what risk. So those sort of things are still there. So NICOM is actually more supportive of using that. But you see, when you're talking about very poor people, the real issue that I guess we still haven't solved is that we were using airtime to pay for insurance. And NCC does not allow you, neither does the CBN want you to use airtime to pay for insurance. So that is totally not happening anymore. And in many of these, some of the other African countries and in Asia, what we've seen is that, these guys buy airtime. So it's like a store of money for some people in a way, I guess because maybe mobile money is a better deal. And therefore using airtime has been something that, they've been able to use to promote the sale of insurance more. And that was what we're all looking for, is to be able to use airtime. But what they've now moved to is for us to be able to use some level of mobile wallets, which is what they're evolving into as an alternative. But honestly, it has its own complications. And as Henry said, to be honest, how many of these guys really are going to have a mobile money account? Do they have a bank account already? How are we, getting them to have those small accounts? But I must say to you that, NICOM is supportive of using them as aggregators. But of course, you need to check all your documentation. You need to go through NICOM and get approvals to do that. But the point of using airtime is not allowed. And I think NCC is still a little bit reticent, but, with a lot of all the inclusion conversations we have been pushing for the last 2 years, to see that happen. Thanks.
Awesome. So to round up this session, because it's been an interesting conversation so far, and I wish that we could go on and on. Rashidat, now, just your final thoughts around trends you think that we'll begin to see, or what you expect, not just insurers now, but for the industry, everybody in the industry, what kind of mindset or change or thing do you want to begin to see, that would, take this industry to the next level? Because we need actions even after this conversation.
I totally agree with you. I'm so much, vested in this industry. I like to joke sometimes that, it's easier to actually earn more money from other places than we do earn in insurance. But like I said, it's a noble profession. The very first thing is open-mindedness and the ability to, work together, even as whether it's, tech startups, whether it's the incumbents, as we're being told or called. I don't see myself as an incumbent. I see myself, as a startup as well, really pushing to make change, right, in AXA. But all of us need to be a lot more open-minded to work together. We need to, sort of bury our own, sort of silo uniqueness and try to, there are companies who have grown large in the industry because they understand how to manage the system, but this system cannot support us as we go forward. So there's openness and collaboration that needs to happen a lot more in the sector. We need to have people who become strong in their niches or in their skill sets and offer it as a service and collaborate together. Some level of, white labeling from some people or the other is something that I see happening because they are very good with this. They have this kind of balance sheet, because to take certain risks, true, you do need a strong balance sheet. And, honestly, some of the new, micro licenses at 300 million, I'm not sure would really be able to drive that, because insurance has its technicalities around reserving. I expect to see a lot more trend happening around, use-based, in terms of people being able to use-based. Perhaps there will be some things happening around telematics and things in that region. A lot more conversations around geolocation and sort of like geo, pricing and geo insuring. It's definitely, an area that we will see evolving as technology, cloud, and all of these things start to support us a lot more, so that even, anyone can afford it. I expect to see a lot more trend in micro or lower level sort of like creation of products across different companies, not just the people you are typically used to. Even the, traditional strategics would have to offer solutions that would help people insure at the lower end of the market. In the long run, we can make an impact on people who are maybe, low income or very poor income, but we cannot cover the absolute poor. That has to be the government. And so I expect to see more collaboration with the government where we're able to cover the very, very lowest end of the pyramid. The government has to come in here and create some base level offering. We all like to say that, maybe the poor people are not insured. Even the well-to-do people on this call, I don't know how many of them have insurance. I'm telling you, if you're in Nigeria, I can almost count in every room I'm in. I ask that question, apart from your motor insurance, which, Henry has told us is only for rich people. How many of you have any other insurance? And they don't. So our culture, and the big change is that we need to have a cultural revolution where we start to train people. Those of us that are even mature need to learn differently, financial skills. And then we teach the children that you must start to save for the future. You must put things away. Don't wait your salary to pay school fees. Why are you not building that school fees, that rent as we go along? If we don't make these changes, it will still be very, very difficult for us. So we need to create micro products, micro solutions. We in AXA, don't mind me pitching in here. We're very, very particular about this. And that's why, we have different solutions we've tested. In healthcare as well, we have some, malaria covers that we're working on with partners. I think Wella Health is one of them. And we are selling policies. People are trying it. And what we want to do is that people must see insurance in action. If they don't see it in action, I'm sorry, we would not have the right level of penetration. It's not about what we advertise to them on TV. I know that it's very expensive to do TV adverts, but we must show people when things happen that insurance is there to protect them. So I'll stop here so that Henry can take a few more of the conversation. Thank you.
Yes, so Henry, what do you expect to say? What I say?
You finished everything. There's nothing else to say.
I did not say more again.
There's nothing else. There's nothing else to say. I should definitely put you on speed dial, and every day I'll just call you and just listen. But I think what do I? The question is, what do we hope to see, or what do we see for the industry to drive? What's the question again? Because I kind of lost track of.
What do we hope to see in the industry going forward?
Yeah. So again, coming from the startup product side of things, I would say that as we're starting to see, so if you see what's happening in the fintech, in the banking and the payment space, in the past couple of years, we saw a lot of innovation driven by startups. So we also caused the banks to also sort of sit up as well. So I think something similar would happen in the InsurTech space as well. Right now we're seeing so many challenger banks, raising a lot of money, starting out. And again, they cost, because they have fantastic user experiences, they basically now just change the way the industry thinks about these things, and then cause the incumbents to also try to innovate or to partner with them. So I believe that we will start to see this in the next 3 to 5 years in our ecosystem as well. I think we'll see a lot more. If you think about the space, there are very few. You can count the InsurTechs, you can count them in your fingers. There are very, very few of us. But I think in the next few years, we start to see a lot of them coming in different places in the value chain, and they will help drive. We're starting to see a lot of all these things happen across the continent, in other places in East Africa. We're starting to see a lot of these people start out, try to do things. People like us who are trying to help out, on sort of the efficiency and the productivity side of things. So I believe that for me, that is what I obviously think that one of the biggest drivers, like Rashidat said, should be sort of regulators, the government. But I feel where we have control over is that we see a lot of young people who are very passionate about the space, try to do new things using technology, and that would fundamentally change things. Because even with the products we have, so one of the things I wanted to say was that when Rashidat said about the industry coming together, right? So it's totally blue ocean. It's just 3%, right? So there's a large market. So if the incumbents can also find ways to create, or even the regulator to start creating, education, start educating the market, right? Rashidat said, maybe most of my friends, maybe very few of them will have, they're still middle class, but many of them will not have insurance products, right? So it's about education. It's about education. So, and it's not something one player would do. It's something maybe the industry needs to figure out a way to do it together. So three things. We'll start to see a lot of InsurTechs, and then those InsurTechs will help the incumbents be a little bit more innovative. We should look forward to having the incumbents partner together to educate the market. And then we should, educating sort of like around getting the regulators to have a lot more momentum in terms of what they think. Because we've seen a lot of people come into the market and then the regulators kill them. So hopefully, all right. Thank you very much.
It was thank you. I hope the regulator is not listening, that they chase some people. So thank you very much for this very insightful conversation. There's still a lot that needs to be done. Like Rashidat said, someone has even quoted Rashidat, people must see insurance in action. Rashidat Adebisi, November 2020. That's it. I think that's the level that we need to get to. They have to see insurance work. We have to pay claims. We have to improve. Technology is helping in that, and even the incumbents who, before now we have said that they are slow to change, or they don't want to, or they are not quick to adapt with technology. They are doing that with AXA Mansard. And thank you very much, Rashidat. Thank you, Henry. It's been a pleasure speaking with you, and I did enjoy this conversation.
Thank you very much.
Thanks. You're welcome. Sorry. All right. Thank you.
All right. So that was the fireside chat with Rashidat and Henry. I hope you enjoyed that conversation. And so in a few minutes time, we're going to be having a special presentation from Frederick Bisberg. Frederick Bisberg is a digital transformation expert. He's based in the UAE, but he's a thought leader when it comes to digital transformation, especially in the insurance industry. And so we're going to be sharing some conversations that we had with him, and he talks a lot about how best to address some of the risks that faces insurers when it comes to digitalization. That's a buzzword at the moment. But how best to carry that out? So we'll start that conversation in about 3 minutes. So please stay tuned. Afterwards, then we'll go on a short break. So thank you very much for hanging on so far. It's been interesting.
Hey, hi, how are you? I'm Frederick. Thanks for tuning in for this session where we're going to talk about de-risking digitization, or in other words, how you make your business transformation or digital transformation a success. I'm very happy to be here and to talk about this. This is a subject that is very, very close to my heart. I've been doing business transformation for the last 25 years, and the last 12 years I've been doing it specifically in the insurance industry. My work has always been looking at how to change the existing organizations into more responsive, more nimble organizations capable of adjusting themselves to changes in market demand in a more efficient way, cost-effective, and with short turnaround times. This is a thing that is extremely needed at the moment, with the pandemic threatening the status quo and challenging how our future markets is going to look like. So I hope you'll enjoy this session where I'll be talking about the common pitfalls when you are entering into a transformation process and how to avoid them. In other words, how to set up your company for a successful transformation. As I said, I've been working in the industry for the last 25 years where I've gotten my hands dirty in real life problems. I've been working with the teams who have performed the transformations. I've been working with the IT departments in changing what had to be changed. So I know what I'm talking about. And I'm happy to share this with you today. I've also taken all my experiences and put them into a book that just been published, Insurance Next, which is about how do you prepare and plan a change of a company where you move it from becoming a rather slow-moving incumbent insurer to a more nimble, flexible company which is capable of meeting the changes in future market demands. Apart from what I'm doing today, where I'm heading the digital transformation and the digital and innovation department of one of the largest insurance companies in the Middle East, I am part of the Digital Insurer, the world's largest network of insurance professionals in digital insurance, where we this year in January 2020 launched what I believe is the world's first mini MBA in digital insurance. Again, where we are focusing on these things. What do we need to learn? What do we need to know in order to actively start changing the way that we work in the insurance industry? So when we are looking at preparing our companies or ourselves for digital transformation or transformation of our companies, then I would say, obviously, there is a lot of risks that you have to be aware of, but there is at least 4 that are crucial for you to be very aware of and to do everything you can to mitigate or to avoid if you can. These 4, I'll tell them to you now, and then we'll talk about how do you actually mitigate these 4 risks in the real world. Because one thing is standing here and telling you, and you probably agree when you hear what it is. And the second thing is, how do we actually deal with it when the rubber hits the road, so to speak, when we go out in our organizations and we try to make this work, because this is what we have to do, right? The first, and in my experience, the worst mistake or the worst thing you can do when you embark on a transformation journey is to go all in. You may have a program that wants to transform your home company, but going all in at once will rip the carpet away under all of your organization. So you will have the employees flying up in the air and they don't know where to land or how to land. You cannot start a digital transformation or a business transformation by affecting all units at the same time and at the same pressure. So you have to avoid this. This is also one of the reasons when you start reading even more for transformation projects, they fail. I believe if you read into this, these are the transformation projects that has tried to go all in at once. So when you plan this, find a way of avoiding this. Another serious mistake is to give the transformation project to IT or to give it to the project management office saying, hey, this is a project, you go handle it. Or this is a digital transformation, let's put it with IT. This is not going to work either. Now, I know I just said don't go all in and change everything at once, but at the same time, you can't dedicate this to one unit alone, because when you start changing the way that you do business, when you start transforming your modus operandi, then you will be touching upon each and every business unit. And therefore, the responsibility deliverability, or at least the execution, cannot be in just one silo. It has to be distributed into the various business units for it to be a success. It's also important that you are realistic about the level of competence that is existing in your company. And what we're talking about here is, now typically you are part of a successful company that's been doing whatever they've been doing for so many years, for decades. They know exactly what you do. They know the customers, the suppliers, the supply chain. They know the systems, they know the products. But that doesn't guarantee that they know the future. That doesn't guarantee that they know how the future processes have to be developed, how they should look like. That doesn't guarantee that they have the sufficient competences at the moment to carry out this digital transformation. Another thing here is very important for you to be aware of is that do we actually have the knowledge required to perform a transformation within the company? If it is a simple, small transformation of 1 or 2 processes, of course you have. But if you're embarking to something that is supposed to take your company from being an incumbent, slower moving company to a fast and nimble, do you have the competences required to take your company to that journey? I would claim that most companies have not. So don't embark on this without having made that assessment. And the last, fourth thing, which most probably is the most important, is the company culture. When you're talking about transformation, it's in the word itself, it is that you will be changing things. You will get into people, you will start changing their habits, you will start changing their jobs, and you will create a lot of tension, a lot of uncertainty. You will also be threatening the existing culture and the existing relationships that exist between the business units and in the informal groups. You have to be very, very, very aware of this. If you're not aware of this culture, if you don't appreciate it, if you don't respect that it's there, you're going to burn your fingers. Because the culture, that will simply eat you up if you don't work with it. If you try to work against culture, I think you'll lose. This is my best bet. So these are the 4 pitfalls. Now the question is, how do we work with these pitfalls? You have to know they're there, and you cannot just close your eyes and pretend that they'll go away if you don't think about them. You have to think about them and you have to mitigate them. However, before we go into the discussion about how do we mitigate these pitfalls in your transformation process, I just like to point out one thing, and this is when we're talking about digitalization. I see people, they understand this in 2 different ways. When now they've gone fully digital, and to some extent they had, right, because the physical paper and the physical visits to the branches was gone simply because it was not allowed and it was not possible anymore. So what many companies they did, they took the existing processes that they were working with and they put power to them. So instead of having a piece of paper that required a wet signature, now the same piece of, and then we get a digital signature on that paper. The process of handling the papers is still the same. This is not transformation in my world. This is digitization, where you simply just put some power to what you're doing. When we're talking transformation, we're talking about changing the processes. We're talking about, maybe we have to change the whole way that we're dealing with claims, the whole way that we're dealing with the paper approvals. So when we start putting power to the processes, then we make sure that it's the right processes and not just the old, maybe inflexible or substandard processes that we're putting power to. So this is a very important distinction for me to make, that you have to, when you embark on a transformational journey, just don't put power on what you have. Be critical and see, okay, how do we do this better, cheaper, and faster? And this is also a good segue into the first step of de-risking the challenges in your digital transformation, because you have to start with the big picture. Remember, I questioned whether the whole company had the competences necessary to understand where you would end up in the future. Big picture. Where are we today? And where do we want to go in the future? Where do we want to be in the future? To me, this requires an analysis of your current competences, your core competences, your current strengths. And you have to look at what are we good at today? And given the market development, the market situation, the competitors, what of these things do we have to let go of simply because they don't add value anymore? And which of the things do we have to augment because these are our pure strengths? And what do we have to add to get where we think is our future competitive position? This is your future target that you need to create this. You need to create, this is where we want to be in 2, 3, 4, 5 years. For sure, you can't make the plans to get there today because the world is changing too fast for you to do that, but you need to have that guiding star. And this is also where many companies, they fail, because this is where they go in and say, okay, we have to be here. Let's change the whole company. So we are getting ready to go there. And that ends in a disaster. So what you have to do is you have to take this journey and break it down into steps and really break it down to micro processes, micro changes, so that you say, okay, if we want to go here, then we can start by changing these small things. When we see these smaller things, they work, we can start changing more things, and we can start changing more things. This is, to me, the key to a successful transformation. Break down what you have to do into very, very small processes and make sure that you are looking at isolated processes. Make sure that when you're starting looking at this, you're not just going all in and saying the full process across all business units is what we have to do. Look at how can we isolate these processes so they disturb as few people as possible. And why would I say this? The fewer people that you disturb when you start changing processes, the greater the chance of successes. Because you won't have as much resistance, you won't have to work with too many new ways of working. And if you can take one of the smaller processes and make a success, then the rest of the company, they will start saying, okay, hey, what happened here? That looks fine. It looks like they had fun doing it. This is important. And they will be much more willing immediately to work with you when you come and say, why don't we look at these processes maybe across 2 business units now and see how we can optimize this? You have to respect that when you start touching the processes in one business unit or in more business units, then you're also, and this is a perception, this is not necessarily reality, but you're also challenging the status quo, you're challenging the way that the company is doing things. So imagine you go into a business unit owner and say, hey, the way you're working here, I think we need to change this. Indirectly, and most likely he or she will hear this, you are saying, what you're doing today is not good enough, let's change it. And of course, that's going to create resistance. People don't like to hear this. We don't like to hear that what we've been doing for 10 years now no longer is good enough, no longer is not good enough. So they will challenge, and what I'm saying here is that if you have some success stories in your baggage saying, you know what, we did these smaller projects over here and they're really happy and it actually worked and this is the business value coming out of it, would you like to embark on this journey with me now? And we have to include other business units as well. This is taking a transformation project and starting small and slowly growing it. So at first logical step is to have to work with you on this. And here is a very good idea to create what is popularly called a cross-functional team, because even though you should be focusing on one single process or a few processes in a single business unit, chances are that these processes will have dependencies either up and down in that business unit through other departments or outside to other functions in the company. So put together a team with the relevant people, with the stakeholders, with the people who know what's going on, and set this as your starting point. And again here, going back to the cultural aspect, when you start assembling people, when you start telling people that they have to change and be part of change and they have to challenge what they've been doing so many years, you will feel this resistance. And if you are all ready and fired up to do your digital transformation and people, they all of a sudden, they say, hey, back up, this is too crazy, we're not going to be part of this, then you will be demotivated. So for me, it's important to advise you to take a step back. Where are these people coming from? What is their point of departure? I touched the point earlier, and think about it. You are coming, first of all, you are indirectly telling them what you've been doing for many years is no longer good enough. We have to do something new. Second of all, you together with them have to define what is this new. So you are embarking on a quite uncertain journey. Third, the people for sure will have read about layoffs and transformations and robotics taking over and automation and all this. So they would also be worried about their future. Adding to this, when you're starting talking about digital and RPA and artificial intelligence and machine learning, then the same people, they may feel that they don't know enough. So they will be worried if they actually have the adequate knowledge to participate on the team, and that again will make them worry about their future in their company. So when you feel this resistance, take a step back and appreciate that these are the typical reasons for people resisting. It's not because people are evil and they don't want to work with you. It's simply because they're worried about their own future, and which is completely natural. So you have to deal with this. You have to embrace this. One of the ways of working with this is also being a little blunt and upfront and saying, yeah, I know that maybe we don't all have the competences that we need today. So we need to reskill or up-qualify ourselves to be better matched with the new future. But however, and this is extremely important, and I've seen this work in many, many cases, you have to tell people, you know what? Now you're an expert in doing this. You've been doing this perfectly for 10, 15 years. I don't know how many years. And now we have to do things a little differently. But you know what? The knowledge that you've gained in doing this for so many years, we need you to apply that knowledge into the new way of working. That's why we need you to change your competences so you can be an integral part of developing with us and with the company. So make sure that you have the needed support tools to educate people, to reskill so they feel competent to follow you along the digitalization journey. This is another important part when you are starting to assemble these teams. The best advice I can give is when you put together the teams and you start thinking about how you want to run the teams, look into Agile and their ways of working with squads. Think about when you put together the team, as I said, take the responsible people from each department or business unit that are required for this process. Make sure that they have the decision power required to make the decisions needed. So they don't have to go ask, they don't have to write memos. They can make the decisions. We have to go this way because this is the target. So we'll make the decision and we go. This is another important point. When you put together the team, make sure that you set a crystal clear target. This is what you have to do. This is the results of what you're doing, and it has to be reached by this date. Now, how you're going to do it is up to you. You're the expert. Go tell me the plan. That will motivate people because they will feel that they're empowered to choose the best way of delivering what they have to do. The delivery of these plans, like monetary or I don't know what, but make sure when you do all this that you don't stop. You have to do so. You have to trust them and you have to put them on the track and say, it's your track, it's your responsibility, it's your budget, it's your decisions. Go. This will motivate people, and this is also one of the ways that you will actually get things done really fast and with a high degree of quality. Well, managers typically have a way of waterfall-ish thinking. First we do this, then we do this, then we're ready to do this. When we achieve this, we can do that. When you're working with transformation and you don't know the future, and you're working with teams who are together with you building the future, it's important that you try to avoid thinking waterfall. You have to think more agile. You have to think more, okay, I'm running a lot of teams in parallel, and these teams are the experts, not me. So my job, instead of going from controlling them in a war servant leadership, where you become the person who removes obstacles in the way, where you become the person that makes sure that people are receiving the right coaching, that they're receiving the right training, that everything that here, as I said, they're the experts. You are relying on them to build the future of the company. So what you can do is make their jobs and lives as easy. It's an important change and change mindset for most leaders, because admittedly, most leaders, they're kind of control things. They would like to see the numbers, they would like to see. Doing this here is becoming teams in parallel with experts, and you probably won't understand everything that they're doing, and you shouldn't. What you can do, though, is make sure that the part of the targets that you set for each group very specific short-term targets that you on a weekly basis. That you're progressing with the teams in terms of completion, but also give the teams this satisfaction of completion. Every week, every day can say, hey, we did it today, check mark, we did it today, yes. And this also drives them to management is a very important tool. It's not necessarily only to make sure that people are working the way they're supposed to, but also to keep up the momentum and say, hey, we're actually doing it, we're getting there, and we said we wanted to do it, and we're doing it. A question that I'm getting asked a lot when I'm doing create an organization around transformation or a digital unit in our company. How do we do this, and what is the right structure? And I believe there is as many answers to this as there are people managers, because it is debatable, right? I can tell you my experience, what I've seen working many times, and that is starting out with an assessment of the company's digital maturity. There's a lot of tools that you can buy or find online. You on a digital maturity scale, how ready is your company today to attack everything outside the world digitally? Most likely you will find that you're not that ready, and this is perfectly okay, because I don't think many companies they are, honestly. And if this is the case, dedicated digital unit with responsibility of running all digital initiatives in the company. I'm not saying that you have to, force everything through that, but I'm saying that this unit will pick up the digital initiatives and gather them into one unit, take responsibility for this, apply best practices, and learn about the organization and how the organization works, and at the same time teaching the organization about digital. This period is typically 1 to 2 years, where the organization is learning to work with digital and seeing the results that can be generated from the digital unit. When the digital maturity increases, it's a good idea to take the talent from the digital business unit and deploy them into the business units. They may still have a matrix reference to the digital business unit to make sure everything is coordinated, but now the talent will be in the business unit, working on a daily basis with the business unit on developing that specific business unit's digital capabilities. So the digital business unit now will be much more focused on coaching and upskilling the people, so they have the skills needed also to deploy digital into the business units. Over time, maybe 1 or 2 years more, you will have enough talent and enough competences in each business unit that can actually close down your digital business unit and start figuring out what to do next, because at that point in time, your digital maturity is so high that digital is more or less a very, very big goal. That's a little deviation from the topic, but I think it's important to about this transformation process, because all transformations will be digital, and you need a very strong digital institution to drive these digital initiatives to make sure that they are happening on budget and on target. So to sum up, there are 4. Don't start your transformation project. Start there and make it more fun into the organization. Second of all, don't give the project management office or IT the responsibility joint team working on. You have to respect that most likely your company will not have the competences required to do this. So find a way of upskilling, training them, or hiring outside talent to be a part of your company's digital transformation journey. Underestimate culture. This is the most important thing of everything. Respect it, work with it, grow with it, and make sure that you are slowly working with the to point it in the right direction. Find your key. I think it's a daunting task. I know for a fact it's very possible. I wish you the best of luck. LinkedIn and connect with me right directly if you have further comments or want to discuss. I'd be more than happy to hear from you. Thank you very much for your time. Take care and stay safe. Goodbye.
Okay, that was Frederick Bisberg talking to us about de-risking digitalization. Like I said earlier, digitalization is a buzzword right now, and he's an expert, and he gave us that. You enjoy that, and so we just launched a poll. We are encouraging everyone to be a part of that, and let's hear what you have to say as regards some of these questions. Which of these technologies would most likely disrupt insurance in Africa? Do you think your company is evaluating technology will put your job at risk? How much technology has your company introduced since COVID-19 and lockdown? And do you think it's important for insurance companies to digitize their processes? So this will run for another 2 minutes, and then we'll go for a break, and we'll be back at 1:20, and we'll start off with a panel, a roundtable session. Conversation, and look forward to that as well. Thank you very much for sticking in. Thank you for being a part of this so far. It's been interesting, and there's still a lot more to come. We still have a presentation left. We still have 2 more roundtable sessions with amazing guests. So look forward to having you. Hi everyone. Thanks for still sticking around for this conference. I know being a part of virtual events can be a drag. Well, it's a new normal, as we have fondly said. But it's been an interesting conversation so far, and I mean we're glad that you guys are here. And I'm very sure that you have taken at least one thing away from all of the conversations that we've had. We've had a panel session, a roundtable session, had a fireside chat, and then a presentation from Frederick Bisberg on de-risking digitalization, which is very imminent. And I thank you again. So we shared a poll just after that presentation, and I mean here is the result. So a good majority of the respondents, that's you, are saying that AI would definitely disrupt, the insurance space in Africa. And in terms of technology and the risk of our jobs, a lot of us, have this understanding that our jobs are not at stake, which is quite positive for me, because at the end of the day, technology is an enabler, and what we need to do as professionals is to learn how all of these technologies work so that we can remain relevant. But these technologies will enable our work to be better and more effective. So on the question about how much technology has your company introduced since COVID-19 and the lockdown, we're definitely seeing a good number of people, saying that management has started introducing some of these processes, and some are already saying that we were actually on that journey even before the pandemic hit, which is quite good. And it shows that we are in the right direction. And then on the question about the importance of digitizing our processes, as we've said over and over again, even considering that was what Frederick spoke about some minutes ago. A good number of us understand that it's quite important. So thank you very much for being a part of that. And it's almost 1:20, and it's time for the next roundtable session. This session is proudly sponsored by Curacell, and it focuses on InsurTech and FinTech. So the FinTechs have been playing in this space for a good number of time, and like Henry mentioned during the fireside chat, there are not so many InsurTechs in Nigeria at the moment. So we want to look at how InsurTech and FinTechs can partner in order to help to have more inclusive insurance. And to moderate this session is Dushima, and I'll be inviting Dushima right about now. So I'll invite all the panelists to share their videos and come on now so we can have that conversation. So welcome everyone, Dushima, Dr. Obrimah, Akin Jones. Welcome.
Thank you, Damola. Good afternoon, everyone. It's been an engaging morning, full of sessions, lots of knowledge shared, lots of arguments about claims. I thought that was really interesting in the panel session in the morning, and looking forward to this conversation today. So we have Akin Jones. Is he here on the call? He's the CEO of the Ela app, a credit and payment solutions fintech that has recently started selling a health insurance or offering a health insurance product. And we also have Dr. Babatunde Obrimah, who's the CEO of the FinTech Association of Nigeria. Good afternoon, gentlemen. How are you doing today?
Yeah, I'm good. Nice to be here.
Good. Great to be here. Thanks. We're good.
Great. So, Akin, I'm going to start with you. there's an article on Medium from the Ella app talking about how looking at data of the reasons why people borrowed money from your platform, 25% of them stated that the reason was to be able to cover medical bills. And that obviously now translated to you guys offering a health insurance product. So I'd like to start with you telling us a little bit about that and how in the process of developing this offering, you have tried to be inclusive, because even though Nigeria is a country of large numbers, majority of the population is poor and their needs are very diverse. So I'd like to hear a little bit from you about that.
Yeah, thanks a lot. I think, it all started just basically by looking at the data. So in 2015, we kicked off as one of the initial digital lenders in the Nigerian market. We proudly like to say we were probably the first digital lender in the Nigerian market. So we took a big risk when no one else would take a risk or venture into that space. We're talking early 2015, when we would go to banks, they would just laugh, like, what are you talking about? Can someone actually give a loan and pay back via their phones? And so we started to see the same trend. So over the year, we've grown to a 1 million user platform. And, we started to see the trends in people who are taking loans on our platform. We give out about 1,000, 1,500 loans a day. And, most of the reasons were for healthcare reasons, so say buying drugs and that kind of usage. And it just dawned on us that if people are taking these micro loans and these mini-sized loans, we're talking anywhere from 5,000 naira to 100,000 naira to pay for medical expenses, then there has to be an opportunity here. We started to plow through the data, and we started to ask ourselves, what is the main reason that we are seeing that people aren't getting insurance? And it's, in our opinion, we think it's 4 things. We think it's something I like to call TAPE, trust, access, pricing, and education. There's not enough trust in the market. There's a cultural issue, like we've heard earlier, that Nigerians just don't trust insurance. Be it your class level, a lot of people just don't trust that insurance companies are going to pay back when due. And a good example we'll say is during this whole NSARS protest when things were destroyed. It would have been a good marketing tool, at least for insurance companies, to show how they were covering those damages, because that's part of the type of psychological thought process people have about insurance. The second will be access. How can you distribute this to rural areas? How can you distribute this countrywide? And for us, we're the access is we're already giving loans. We're already giving thousands of loans a day. We already have people on our platform. So why not drive off that platform? Then pricing. Pricing is always going to be sensitive because you're going to lose money before you make money if you want to penetrate insurance really into the rural areas. You can't just think of it like from a pure profit perspective, as most Nigerian organizations would think about this. Because when you're trying to scale a product, you can use any product from Facebook to the digital lenders. You're going to take that hit to get people to acclimatize to that product. And the last but not the least is education. We have to educate people about insurance, the use of insurance, the benefits of insurance. And the insurance companies might have to create more creative products in the sense that maybe if those premiums are not used, maybe there are products in which you can get your premium back. And those are some of the things that got us thinking, and that's why we launched this. And we've seen pretty good traction so far. It's not been as exciting as we would have expected. Penetration is not as high as I would have personally hoped. But it's doing well. We started off with 30-day free trials. The question is just what is the drop-off rate after that 30-day free trial is done. Yeah.
When you say the take-up and penetration is not as high as you had expected it to see, is there anything that you're seeing as to the reason why that is? Is it just the year that 2020 has been, or perhaps is it maybe a bit more in terms of education of people not really understanding what insurance, the benefit insurance can provide for them and their families?
I'd say one is trust and two is pricing. I think it just takes time to build trust with people that, that as a reseller of insurance, that people will, buy into this, that you're going to cover everything you say you're going to cover, that, you're saying you're giving what, 500,000 to 800,000 worth of insurance cover. And, people want to believe that this is true. And on the insurance side too, you have to understand that, they're going to need more people to use this product for it to be worth it for them, because they're not also in the business to lose money. So it's kind of like a chicken and egg thing. On one hand, a lot of people are poor. Like, we did this auto debit where you can put your card in and, we can automatically debit your account every month. And, maybe 2-3 out of 10 people actually have their cards funded or their accounts funded for an expense as small as 2,000 naira. So, or even as small as 500 naira, so when you think about it, a lot of the macros are sometimes the biggest problem. We have some major macroeconomic issues as a country we're facing now. And I feel like as those get better, maybe we'll see a surge in insurance.
Great, fantastic. Dr. Obrimah, my next question is for you. You're the CEO of the FinTech Association of Nigeria, and your mission is really about supporting all stakeholders to achieve a thriving and growing FinTech industry. So in what ways, is the FinTech Association planning to work with InsurTechs or to support them to encourage, the few that are playing in the space?
Thank you very much. I think for us, we're driven by 3 objectives. The first one is connect, being able to bring together people within the fintech ecosystem, because we're an ecosystem association. So, we have over 15 different sectors within the association. The second one is to accelerate technological growth. And the third is advocacy, to ensure that there are progressive regulatory reforms to support creativity and innovation within the tech space. So, what we've done, or what we've started doing, is the fact that we've started talking with the regulator, which is NIACOM, about the need to have a fintech or an InsurTech roadmap for the insurance sector. And I know that they are doing some things in-house, which they will eventually, bring to the open. But while waiting for regulators, because the general trend is that technology is always ahead of regulation. So regulators try to do catch up. So while waiting for them, we have engaged the operators. And what we've done is to work with NIA to start a training on digitization, because it's really important that for InsurTech to be able to be established properly in Nigeria, the operators must understand the dynamics of digitization. So we had that was in September, a training called Digital 101, and we had over 240 insurers attending that. In January, we're having what you call Digital 201, which looks at InsurTech, product development, social marketing, and being able to develop products that are appropriate. I think that one of the biggest challenges, which Akin had alluded to, is the fact that, we need to deal with the issue of trust. They need to expand the market. So, when I look at insurance, from a buyer's perspective, you've cut off a whole lot of people. And in business, the higher the risk, the higher the premium. Also, I know insurance works on probability. So, if you say that above 65, you are cut off, that's a huge market, really, And so if at that age you want to increase premium for life insurance, for health insurance, but taking them out completely, I think that they need to look at that. A few years ago, the Harvard Business Review did a publication called "It's Time to Retire Retirement." And that's because people are living healthier and they're living longer. Even in Nigeria, academicians now retire at 70, judges retire at 70. So we need to look at those dynamics again, and how do we deal with those issues, bringing more people into, because I believe that insurance can actually help to stimulate financial inclusion. So far, financial inclusion is about wanting people to open accounts, but I think that financial inclusion is about selling benefits to people. You know, I give this example that, look, my parents are 87 and 85. My dad runs his account. My mom doesn't. Her account is dormant and she's not interested in running it. If anybody wants to send money to my mom, she says, send it to me. So I get it, and then I'll find out I'm going to get it across to her. But if you go to her and you probably want to sell her health insurance, she'll probably listen to you, because at that age, they deal with, health issues, but you've cut them off. You know, so, we need to look at that. Let's take agriculture, for example. The average farmer, if you were for financial inclusion, talking to me about insurance for scorpion bites or snake bites, might interest him rather than saying, come and open an account. But in doing that, you get him to open an account. So I think that it's looking at benefits, and insurance can come up with varied products that, can attract, can bring in more people into the space. I think that, so for us as an association, we think that capacity development is critical. So let's start with digital literacy with operators, with regulators, and then we can now go to, once the operators and regulators are ready, it's now easier to go to the buyers to be able to sell to them and then build trust into it. That's a big challenge. But for us as an association, we are, because when we look at it, InsurTech has just less than 3% of the tech operator, in terms of participants in the tech space. So InsurTech is just about 3% of the total tech space. That's small. And when you look at penetration, it's less than 2%. That's a huge space where there's a whole lot of opportunity. So we think that let's start with capacity development, and it's easier to do the rest.
Fantastic. Thank you, Mr. Obrimah. Well, I'm going to throw that back to Akin. Does your health insurance offering cover people over 60, or are they not allowed to sign up? And if the answer is no, why?
Oh, it does cover people over 60. It's a partnership with IGEA, and the plan we have is it really just depends on what exactly the kind of plan they're signing up, because we have different plans. And actually, we're bringing more partners onto the platform. So the goal is, we're just trying to find more effective plans. It can't just be a youth-focused plan. So it does cover a wide variety of ages. Yeah.
Fantastic. One of the recurring things that keeps coming back from your comments and the conversations that we had yesterday is the issue of trust, and people not trusting insurance companies and their offerings, and also people not having that level of education and understanding of the value that insurance can provide. From both of you, who do you really think should be driving educating people about insurance? Is it the responsibility of the regulator? Is it the responsibility of organizations like yours, Akin, or are we waiting for international development organizations and nonprofits like the FinTech Association? Who's really going to take on that job to help people understand and educate them?
I can take that first. I think for me, I think we all have a role to play. I think, individual companies definitely have a role to play, but the government still plays a major role. The regulators still have to play a major role. I think, we can see more, the Health Insurance Act that was being debated in the Senate, that was about, but the goal is the government really needs to put a lot more money towards healthcare. I think, having $2 billion, $3 billion towards healthcare for Nigeria, as our total healthcare budget for a country of 200 million people is just too small. I think insurance companies need to be somewhat subsidized. I know there's a national health insurance scheme, but I think there has to be a more effective plan towards subsidizing insurance. I've heard of schemes in universities. I know Unilag had one and probably still has one now, whereby students, pay a very minute sum for insurance. And I think it just has to be mandated the same way car insurance is mandated. Healthcare is a right. And so we have to find more effective ways to get it to people, and we all have to work together. You can't leave the buck on the government alone, but the government plays a major part, because in a country like Nigeria, where governments government is everything, and government plays a very key role in everything that happens. Them putting that first foot forward and actually driving it, everything from, I guess you could start from primary school and have the students in primary school actually mandate every primary school, every student must be insured. Maybe there's a fee taken out, or is a subsidized insurance plan, working with, large scale insurance companies. If we can distribute loans to, millions of people, we're talking right now on the digital lending space, the amount of loans that we push out, there's no reason why we can't get insurance. Of course, if government subsidized and if there's a clear working plan to millions of people. We've seen the telcos at some point play a role whereby, they were offering insurance via phones, and, of course, the government and the regulators said you couldn't debit people from their airtime. But, these are some of the things that might have to be revisited, because, Nigeria as a country should be treated as a startup. I think when our administrators look at this country, the whole country needs to stop treating itself like this big, humongous organization, but has to go back and treat itself like a startup and figure out ways in which it can maneuver and make things happen, but not always in a very structured path. Is my own 2 cents.
Fantastic, thank you. Dr. Obrimah.
Yes, I think that, one of the ways to deal with the issue of trust is data. So, we need to be able to say, this is data. We have 10,000 people insured. We have 2,000 who made claims and they were paid. So like they say in church, testimony to show that. So if I know that within my community, somebody had a challenge and was paid, it gives me more confidence to do it. So if even for micro insurance, if you do that in the villages, and this guy has a snake bite, he gets hospital treatment free. He has a motorcycle accident, he gets treated free. Because it's insured, it builds trust and people can say it. So I think that data is important, and they need to create that. I think the insurance needs to be more visible in terms of talking about what they've done. Now about insurance claims and they were paid. So, you need to use that as a way to let people know that, fine, there might be, maybe this old perception, this is a new perception. There's a need to do that. So I think data and showing evidence of what has been done is critical to be able to build trust.
Fantastic. We've got a few and questions in the chat box that I'm just going to go over before we move on to the next thing. The first is from Otto Obong Idem, and I think this is for you, Dr. Obrimah, in regards to the digitalization trainings you mentioned. The question is, what does it take to attend such training, or is that only open to, the public sector and the regulators? Are you planning to do that on, a larger scale?
Okay, for now, like I said, we're partnering with, for us, collaboration is critical. So all insurance companies should be with NIA, I guess. And so we partner with NIA, and they do the adverts to all the insurance companies. Now, we for the one we're planning for January, we've had that discussion. I think that some people, there was that question about what if the public wants to attend. And we'll say we'll probably leave it open. For the public, so we'll advertise it. If people in the public want to attend, fine, that's good. But that's the way we are running presently. But because it's really important that let's start with the key operators, and then public who might be interested can key in. So, it's good that question has come, so I can even let the NIA know that there's a need to not just advertise within the insurance circle, but to make it public so that people who are interested can also be part of it.
Fantastic. Another comment from Abiyoye Olufemi. She's agreeing with you, Dr. Obrimah, that word of mouth is great advertising for insurance. Witness Godwin says the educating should be done by all. That's agreeing with Akin that It's a job for everyone, but regulators should be at the forefront. And this is a comment from Abimbola Onokomaya, who's the MD of Peak Thrust Insurance Brokers. Educating the public about insurance should be all inclusive, since insurance covers every aspect of life and the economy from the cradle to the grave. So just going back again to talking about the regulators, what would you both like to see, from the regulators? Fintechs and InsurTechs do kind of sort of share a few of the same regulators. Looking forward to 2021, what would you like to see from the regulators that will make your jobs easier?
I would say, just jumping in, I'd say something around sandboxes, and I know this has been done more in the fintech space. I don't know how much it's been done in the InsurTech space. I think sandboxes, hackathons, I think more meetings. I think associations like the Fintech Association of Nigeria are very good. I think they act as a forefront to the regulators, and I think they act as a middleman to the regulators. So, those associations are very much welcome and are very much good. But, more sandboxes, more hackathons. I think it's very hard to get the college students or the university students who are building these very revolutionary products to meet regulators. Like, where would a 18-year-old boy who's in university working on some great products with friends, and they have this great idea, where's that pathway for them to actually launch their product without huge capital and the huge capital constraints that exist? I remember when we were starting, I remember how tough it was to come up with the capital. I remember what we had, how difficult that was. So how do we, build that system that, our youth that are building these very interesting products have somewhere they can go? They can be on the NICOM site, like, hey, are you a startup building an InsurTech product? This is the process. This is what you have to do. This is a step by step. You have to register here. You have to do this. You have to do this. So it and you also don't want the illegalities. You don't want the, anyone fraudulent trying to get into the industry to do something that they're not supposed to be doing. But you also don't want to leave out the people who are innovating, but just because of capital constraints can't get their innovation out to the world. So that balance will come from people like the Fintech Association of Nigeria, will come from the regulators, and, will come from hosting more events that bring everything together, I think, is my opinion.
Thank you.
Okay, I quite agree with Akin. There's a need to have more hackathons, but the hackathons will be a function of defining what the pain points are, so people actually, are working towards providing solutions to the pain points that have been identified. I also quite agree with the issue of having sandboxes. Because when you look at even within the financial system, the cheapest license to get from CBN today is 50 million naira. So where does a fresh graduate get that from? So that's a huge challenge in terms of the licensing issues. Which we keep discussing with the regulators. They need to look at different regimes for licensing. I also think that younger people need to also look at how they can collaborate or partner. That's a big challenge we also have in this environment. We all don't like partnerships. Everybody likes silos because it's mine, so we need to deal with that mindset also. I think the partnerships that will work, I always say that 1% of what is doing very well is better than what 100% of what's not doing well. So, you need to look at where can I get partnerships that will work for me and I'll still be good. So I think that the regulators, are responding. What I would like to see from NICOM is that whatever they are doing in terms of the tech space should be inclusive. They should bring everybody, which is what, for us, we work with all the regulators. Like, for example, SEC will set up a committee, bring operators, bring regulators, bring all stakeholders, and we can come up with a roadmap. I think that I would like them to use that same kind of approach. So it's stakeholder participation rather than regulator saying this is what we want you to do. So but I think that there's a lot of opportunities. We can always it will keep getting better. Like you say, we're a startup country, so we'll make the mistakes, but then we'll keep improving on them. The good thing is that even the government realizes the need for that technology is what's going to drive the future, and the need to, start putting structures in place to be able to achieve that.
Fantastic. Thank you, Dr. Obrimah. I could just see Rob, who's joined the call. Thank you for joining us. Rob is the author of a book called The End of Insurance as We Know It, and the most interesting man in insurance. We've just been having a conversation about fintechs and insurtechs and how they can partner together for more inclusive insurance. A question to all, I find that when we talk about inclusive insurance, in Nigeria and in this part of the world, we tend to talk about microinsurance or health insurance specifically. So I don't know, Akin, are you planning to develop any other types of insurance, or is health just the lowest hanging fruit that, is useful to majority of people in this market?
No, we're looking at, partnering with other insurance companies to roll out other products. We're partnering with more companies on the health side. We're partnering on the automobile side, on the equipment side. There's a lot of needs on the insurance side. I think it's just a step-by-step process. I feel like health, we launched during a time of COVID. Health was a very pertinent need. Health insurance, for lack of a better word, has better margins if well executed. And so there's a lot of reasons why, we decided to kick off with health. There's much more of a need for that too. You always go where the need is. But, our platform is going to be, a wide array of insurance products that are going to launch soon. I think the key for us is how do we use artificial intelligence and the data we already have to be able to be smarter about insurance, be able to recommend insurance products to people who are paying bills on our platform or getting loans on our platform, so that we can really get insurance to fit for each person who's looking for one.
Fantastic. There's a question here that's come up in the chat box that's for you, and it's from Otto Obong Idem, and he says, what makes the Ella app insurance offering different from buying directly from Hygieia, and why should people buy from your platform instead if it's a partnership with Hygieia?
I think it's a great question. I think for us, it's the experience. We want you to come in, more flexible plans. We allow you to buy monthly. There's more perks, more giveaways, more, just a more user-friendly approach, which, the average insurance company will see as crazy or as stupid, trying to build that customer loyalty on a one-to-one basis with the user. And then there's also a bevy of other products you can get from us. So it's really just the customer-centric experience that we're building. And, as time goes on, we'll be able to offer more customized products. Hygieia as a partner has been a good one so far. And, we have other partners coming on board. And, we'll be able to offer more flexible products and more people-specific products, because the Hygieia product is specific for a particular type of customer, but for others, it just might not work. So, we're building other products that fit each customer's purview. And that's the customer-centric experience is where we offer value.
Fantastic. Thank you. Right. So my next question is for Rob. When we talk about inclusive insurance, it's not just about partnerships and working with the regulators and fintechs. It's also about the people that work in the industry. And in one of the chapters in your book, you really talk a lot about, the future workforce of the insurance industry and how things like technology are changing that. You've had a 25-year career working in insurance, and you've written this book now. So I guess just to wrap up, I'd like you to talk a little bit about, how we can make the workforce more inclusive and the skills that, people really need to develop, and insurance companies and insurtechs need to look out for or train up in the people that they already employ.
It's a fantastic question. You heard earlier, right, talk about artificial intelligence, and we're going through a complete revolution really in insurance. It's a very old industry, but in some ways it's still very young and very immature, and has a lot of opportunity to grow and to meet the full needs of everybody, not just in a couple of segments. And technology is going to lead the way. So we already are seeing that in some instances, and we're going to continue to see that over the next decade and beyond. That's something that was really striking to me as a career professional over the past 25 years, and really in the last 5, seeing what technology was going to do for our industry for the next 25 years, which I don't think will look anything like my first 25 years in the industry. But at the end of the day, this is still about humans, and it's still about needs, and it's about empathy. Risk has not changed. In fact, if anything, it's gotten more risky. We have more exposure. We have more things that we need to be protected from, and we can't always rely on technology, nor will we want to. Right? We want humans to be there in our time of need. So it's really about having technology be there when we want it to be there. Certainly during the purchasing process, to manage policies, et cetera. But then we want humans to be there during the claims process. They don't have to be there throughout. I think technology can help, but it's really the companies that understand when do we want a machine and when do we want a human. And I also think that young people are really critical to making us successful. People today that are entering the industry, they're digital natives, right? They have been using this advanced technology throughout their entire lives, and they're accustomed to the pace of technological change. Where somebody like myself, I try to keep up, I try to learn it, but it's harder. And so I think just those traditions of, the elders, the most senior people, right, should be running the company or making decisions. I don't think it should always be that way. We need to make sure that we're hearing an array of voices from people with different backgrounds, different experiences, and really bringing that to bear to serve everybody's needs. So it can't just be that the most senior people make all the decisions, because they aren't necessarily in the best position to make sure that the company is moving forward to meet tomorrow's needs.
Fantastic. Thank you, Rob. We've got just a few more minutes to wrap up. So I think I'm just going to go back to the beginning from you, Akin, just your final thoughts on how we can work together, fintechs and insurtechs, to provide more inclusive solutions for all.
I feel like it's all about sacrifice. I feel like insurance companies have some governance structures that might make it very difficult for them to effectively partner with technology companies. And I feel like those companies have to go back internally and rethink how they operate and rethink what thesis or what ethos they believe their partnerships should be about. And, what kind of sacrifices do we want to make? Are we willing to share? Or do we feel like, we can do it all in-house? Is it not just to hire some engineers to come in and build it for us? Tech is about iteration. It's about being able to look at the product and continuously iterate. Since when we launched our product in roughly April, May, we've iterated at least 3 to 4 times, and there's one more iteration coming. And this is all about learning from our users versus a very big corporate governance structure that might take 10 layers of approvals to get things through. So are you going to be able to build little silos within your organizations that are going to foster creativity and foster partnerships? I think that's the question I'm throwing to the insurance companies. And for us tech companies, are we going to be able to boost up our risk management processes, be able to put the capital, raise the right amount of capital to also share this risk with the insurance companies? If we can do that, the sky is the limit for this market, this sector. The opportunity is endless. 3% on 200 million. Insurance is where you need to be right now, be it fintech, be wherever. So we're excited.
Thank you, Akin. And we just got a comment agreeing with your point that the management structure of underwriting firms will make it a bit challenging to holistically partner full-time with technology companies. So Dr. Obrimah, your final thoughts, and then Rob, your thoughts as well.
Well, I mean, there's no doubt that collaboration is key. For us as association, we'll keep looking at how we can create that nexus for collaboration between the insurance players, regulators, and the markets. Like I said, capacity development is critical, and that's what we'll focus on to start with, and we'll keep doing that.
Thank you.
From my perspective, I would say it's really about building trust. We kind of talked about that as a group a little bit yesterday as we got together, and that seemed to be a common theme. So how can we build trust? How can we grow the insurance ecosystem? How can we make it a more mature market and do it in ways that consumers trust the insurance industry? Folks have in the past really relied on themselves and each other for savings. They would have saved money. People talk about putting money under the mattress or putting in the piggy bank or rainy day fund. And these are the types of risks that we want to provide insurance for, so that money doesn't have to be stuffed under the mattress, so that it can be used to purchase new things, to make investments for a household or for a business. And that actually helps grow the economy at large. So there's some strong reasons, society-wise and even from the government, that they should encourage the growth of the insurance sector. It definitely helps modernize economies. And I think with the technologies that we have, with the brain power that we have, as you've seen on this call and elsewhere at the conference today, we can certainly make this happen. And then I think the other exciting thing is that you don't have to be tied down by the way that folks in the United States, where I live, in the UK and others have always done it either, because those can come with legacy systems, those can come with other burdens. And so you have an ability to start from a different place and to rethink things going forward, leveraging the technology that we have today. So I agree that it's a very exciting time, and I look forward to the innovation that comes over the next decade.
Fantastic. Thank you, Rob. Thank you, Akin. Thank you, Dr. Obrimah. We've come right up to 2 o'clock, so we're going to end things here and hand it back over to Damola and Folumi and the rest of the sessions this afternoon.
Okay, thank you, Deshina. Nice to be speaking with all of you. Rob, Akin, bye.
All right.
Thank you very much. Very interesting session. We're talking about InsurTech and FinTech. These guys are playing right on that field. So really just hearing from the horse's mouth. And I want to say thank you to Dushima as well for moderating this session. This has been very good, and we are going on to the next part of this event. It's going to be a presentation from Folumi. I'm super excited about this one because she's my oga, so I want to hear my oga make presentation. So yeah, she's going to be speaking on simplifying insurance. And we're going to be having that session start off at 2:10. So stick around for that. Thank you very much, everyone, so far. Hello, everyone. So it's about time for the presentation for this session, and it's going to be on simplifying insurance for financial inclusion. So the next voice I'm going to be hearing is going to be Folumi's voice. I've been the one speaking all day, but I think she has a very important assignment this afternoon. So that's why I said I was going to take over all of the talking today. So please follow me. You have the floor.
Hi, thank you very much for joining this particular session. Being the first InsurTech Business Series Conference, and I've seen the numbers of the participants, and I must say that I'm impressed. Thank you so much for taking your time out. And also to the speakers, before me, thank you as well for agreeing to do this with us. I know that the majority of the discussions we've made today had been around product innovation, process innovation, rescaling insurance, and also, in terms of actually penetrating the markets, basically partnering and all of that. So on that note, I would like to, go into my presentation. And so it's called Simplifying Insurance for Financial Inclusion. I hope you can all hear me because it seems like there's an interference, but I'll proceed. So when we say simplifying insurance, what exactly do we mean? I remember, having an interview with Ekerete Ola Gam. He's going to be the moderator for the next session. And I asked him that the numbers we have in Nigeria, for instance, at the end of the day, do they translate to premium? We say that we have 200 million at the end of the day. And can we actually convert this particular population number to premium? The answer is at the moment, no, because with a penetration rate of 0.3, it means that there's more to do. And it simply means that we are actually not insuring the unserved. Moving on to the next slide. All right, so this is just like, a global view of what it is right now in terms of the Nigerian population, in terms of their buying power. Now, if you look at the numbers, you will see that majority of Nigerians are poor. You have ultra poor, you have the poor, you have survivors, you have super survivors, and as well as the skin guys. And this is just to show that we have been paying attention to, I wouldn't say wrong population, but it just seems like majority of us are skewed towards the top echelon. We're trying as much as possible to get the attention of people who don't see insurance as a need, a necessity. Apparently, we know that some of them probably even already have their own risk management method matrix, or sometimes some of them already have insurances that come with packages from the organizations and all of that. So if we say that according to according to the statistics, that we have about 82 million. Next slide, please. We have 82 million Nigerians regarded as poor, and that's because their annual buying income or their annual consumption expenditure is about 137,000 naira. Next slide, please. So yeah, it's saying that in Nigeria, it says 40.1% of the population currently lives below the poverty line. Now, you even have below the poverty line, then you have the poverty line, as well as those that are slightly above the poverty line. So what exactly are we doing to this category of population? If you have 82 million people that are below poverty line, you can imagine how that number would impact insurance penetration in Nigeria. So out of 200 million, you already have 82 people that could, that spent a number of 137,000 naira per annum. Some of us can even survive on that per month. And then we have people about over 82 million surviving on a particular amount per month per annum. And this goes to show that I would give an instance for life insurance, for instance. Imagine having to purchase life insurance for 5,000 naira per month. It means that this category of people would readily not be able to afford it, because if I cannot even eat and I could not even afford $1 per day, then how would I be able to afford to pay a premium of 5,000 per month? So it goes to show that we need to start breaking down and restructuring some of our products if we want to increase that penetration index. The earlier keynote speaker talked about Kenya, and I would like to bring in South Africa. Kenya's current population index rate is at 2.75%, and then you have South Africa as the highest at 12.89%, and then you have Nigeria with the largest population country in Africa at the moment at 0.3%. It means that we need to start looking outwards, and we need to look beyond what it is that we're currently doing. So this simply means that we probably need to start unbundling most of our products, and we need to start selling micro insurance. This is a market opportunity for micro insurance. Please, the next slide. Now, what exactly would you think would be the market reaction? I would like us to pay attention to the FMCGs. Now, these are products lineup. Recently, I saw on Twitter that Daytona comes in second. It means that these guys are actually moving with the tides. They're understanding that the buying power is gradually dropping. And so it's important for them to move to a more affordable product and accessible by a lot of the masses in Nigeria. And the most interesting part, which is actually unbelievable, is Baileys. Who would have thought that Baileys would actually come down to a point where they would now be designing and making such a Baileys available for people to drink. And if you've lived in Nigeria, typically you will see that even the bus drivers in the morning, they take some of their sachet drinks. I don't know what it's called, maybe paraga or something. And then dry gin actually, and then they take it in the morning before they go about their day. And at night, in the evening, every single time they have an opportunity to do that, that's what they can afford. That's what their buying power can afford. They can afford to pay for that because it is cheap, it is readily available, and it is super, 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 super accessible. Next slide, please. And so let's not focus on the FMCGs. We also need to look at sample insurance products. I like the fact that we had Ella and we have Wella on this as our panelists, and they've actually spoken before now. And of course, it has interested us to know that these guys are beginning to onboard a lot of product offerings and all of that. So much to say malaria insurance, for instance. Now, who would have thought that there's a point where we can actually pick out a particular disease insurance from the entire package of health insurance? And that goes to show, for instance, that it is important for us to begin to start unbundling certain products. We need to start seeing how to, minimize such, most of our products. Try to, as much as possible, tweak it to fit the needs of most Nigerians in the underserved population. And then you have Tangerine Life also, offering a term assurance policy at 950 naira per month. So now you are beginning to break the premium cycle. You're beginning to break the amount. So rather than pay, most insurance companies will tell you to just pay a term life premium of about 30-something thousand, and then you're wondering, I don't even have that money. How much more? And this is a population that probably sees insurance. I mean, insurance is a necessity, but how again do you sell insurance to a population that don't actually see the value in it? So it's important for us to start carrying a lot of people. And interestingly, GT Bank also created a product called Better Health. And Better Health, what does Better Health do? With 500 naira, you're probably covered. And that's actually very, very affordable. So in terms of affordability, in terms of bundling, it's really important for us to begin to break down most of these products to access the large market. The next slide, please. And so why am I saying all of this? Is because it's important for us now to begin to adopt the bottom of pyramid strategy. Henry actually mentioned this earlier, and I would like to actually delve on it. Now, what's the bottom of pyramid strategy? So what bottom of pyramid strategy is basically saying is that there are, three parts of the pyramid. You have those that are, top of the pyramid, which are the HNIs. You have people that are middle of the pyramid, which are middle class, which, as it is, I actually read an article recently that particular class is beginning to collapse in Nigeria. So we're not even sure if we currently have the middle class, or we're just, or the middle class is just probably surviving to be differentiated from, the low class income. And then you have bottom of the pyramid, where you have the poor and the ultra poor. Now, why am I saying all of this is because you have majority of the people on the, bottom down pyramid, and that's the middle class, that's the middle pyramid, and the bottom of the pyramid. So it's important for us to actually begin to make products suitable for these particular categories of people. And this, again, will be exploring the sachet of bite-sized marketing, as well as the better fit product model. So moving on to the next slide. Now, for the sachet of bite-sized marketing strategy, I've been trying as much as possible in the course of my presentation to talk about micro insurance. And what is this saying? It says here that this is a strategy of miniaturization, providing sachet insurance products, also known as bite-sized insurance products, which are low ticket size, small premium, simple and digital-based insurance products. Now, these are very, very, like you could see the sachet as mentioned earlier, for Baileys, you could see the one for Dettol, you could see the one for Morning Crush. Now, there are majority in the bottom pyramid that could actually afford that. And that's how we're asking us to, adopt that model for insurance. And I mean, what are the benefits? It comes with affordable premium. So ordinarily, for instance, if you have an insurance premium that says, for every 15 naira you pay, you have a life cover of 10,000 naira. For every 100 naira you pay, you have a life cover of 100,000 naira. A lot of people would actually want to buy into it because, I mean, it's 100 naira, and you have a lot of people that would readily want to pay that particular amount of money. And for you to come and say, from us, you have to pay 5,000 naira or 10,000 naira, you might not even have customers at the end of the month. In fact, the customers you might have maybe because some agents probably have to strangle the neck of their customers to say, please, you have to buy this from me so that I can meet my LOPs or, meet my target, basically. And moving on, it says, Moving on, it says, simple to buy and automated policy processes. If you're going to have high volume transactions, it's important for you to, have it very, very easy. So if I want to, onboard on a particular platform, I need it to be as simple as possible. And I know that I'm privy to what Cornerstone did with Airtel, and it was so easy because they were able to ride on the database of Airtel. And all you have to do was just type in USSD code and you're good. It was that simple. So it's important for us to have automated policy processes. Then moving on, you have product packaging and distribution. We need to get our distribution right. For you to get to the underserved, we cannot keep doing what we're currently doing. Agents sometimes cannot access these people because by the time you factor in agency fee, you factor in a lot of commission payments and all of that. At the end of the day, we are probably eating from your income, and that's a lot. So we need to get it right. And this sachet of vital marketing strategy actually affords us that opportunity. And then it also allows for participation of first timers. You'll be surprised at how many people will be interested in actually buying this, especially millennials, because it's easy, it's within their pocket size. They don't have to go all out to rob a bank to pay the premium. It's just as simple as saying, well, if I buy Fanta, I could as well pay for insurance. So it's that allowance for first-time buyers that is important. And how does such a size marketing work? It works with numbers, and we see that Nigeria has the numbers. Then those numbers need to begin to translate to premium. And so we don't want to have a penetration rate of 0.3%. We need to see that it is moving to the 1%, it is moving to the 1.5%, it is moving to the 2%. And how do we achieve that? It's true, sachet size marketing. It's that important. But of course, this doesn't come with it. I mean, it doesn't come perfect. It has its own limitation because sachet size, basically, all you're doing is onboarding products. You are picking up, say, a live product, and you're picking out a particular feature, and you're giving it to a customer to pay for the particular feature, say, for instance, an add-on. And so when we are saying that it needs product innovation, you're not exactly giving the market a new product that might suit their need. So at the end of the day, when you give an unbundled product, for instance, it might not be what the market wants at the time. And so this could actually lead to wastage in investments, because at the end of the day, you would have invested so much in advertisement, marketing, and all of that. And at the end of the day, people are actually not buying that particular product because it is not what they want. All you have done is to say, okay, motor insurance, so I'm going to have to, take a particular add-on, for instance, say personal accident, and then I'm just going to pick that out and ask people to pay 50 naira for it. What if that's not what they're looking for? So moving into the next one. All right, so this is a better fit product strategy. So it also takes some of the features of the bite-sized or sachet marketing strategy, but except that it goes ahead to redefine it. So now you're not just having first timers, you're also having existing customers who might be interested in purchasing a new product, because now you're moving from the point of just onboarding products to creating new products that is also affordable and nominal in value, and also easy, like simple to access. It is easily accessible, and the customer service is also good. So that's what better fit product strategy does. So when you combine both strategy together, you're actually able to come up with a refined product, or refined products that can, that's sellable and marketable in the market. And so with all of that, I believe that we can actually use that to penetrate the current market in Nigeria. So we're looking at, again, don't forget, we're looking at the BOP, that's bottom of pyramid, which are like the top, the bottom two, and which is important for us to penetrate as much as possible before we start considering product for our HNI, which we already, most of us even have at the moment. So it's important for us to go down to the underserved and give them most of these, products in order for us to, upscale most of our insurance markets and our products. Next slide, please. So where to start? Like I mentioned earlier, you need to understand the retail market. So we're not just going into the market to say, well, follow me said sachet size, so we're going to get sachet size. No, we need to understand your current market. What do they want? I read somewhere I think it's in India, that insurers are, one of the sachet products there is called spectacle insurance. And that's for the number of people using glasses in that particular market. And it is selling because a lot of people currently use glasses in India. And so who would want to, people that, of course, some of the frames that we get, we all know that they're expensive. You can have as expensive as 50,000, as 100,000, as 200,000, and depends on how funky and how expensive your glasses. And so when they give them all of those opportunity to insure the spectacles, it comes back as when it's broken, you will pay for it as long as it's within a particular threshold. So you need to understand what your market wants. Are they looking for the products that you're offering? Are they looking for the sites that you're offering? So we need to start breaking down all of those things. Then from there, we need to review our retail products and existing services. The current services, are they enough to address the market? Are you going to be having your current service cater to millions of people that you're trying to reach out to? Hope is not one day that your customer service agent will come back and say, man, I'm done because I can no longer handle the volume of calls I receive in a day. Or your underwriters come back and say, you know what, I give up because of course the process is probably still manual and it is not automated. So we need to review all of that. So for the products that we need to unbundle, we need to unbundle them. And for those that, moving to the next one, it says create actual retail products and services. So these are when you need to start looking inward to say, okay, do I need to partner with people? Do I need to partner with those that are gotten the distribution right? Do I need to create new products for the current market, for the emerging market? Do they need what I'm currently offering? So by the time we begin to answer most of those questions, we begin to see a different dimension of how exactly they can serve the underserved as it currently is. Next slide, please. Okay, so now this is redefining the distribution. And according to PwC, pardon me, it's a bit small here. So it says a modular, scalable, cloud-based and API-driven architecture that can handle concurrent transactions, as I mentioned earlier. So you need something that is actually automated, that can handle concurrent transaction across customized product lines and last mile distribution channels to be a good architecture for such a product. A robust ecosystem comprising partners and third-party service providers would be an ideal service delivery model. And that goes to show that, again, we actually have to find a way to automate the system. And if we realize that we can't, then that is actually where partnership comes in. And so what do I mean? The use of digitalized platform. We need to be able to get a swift, seamless platform that allows for onboarding. And what do I mean by onboarding? I don't need to go through 10 pages to actually fill a form to just pay 15 premium. No, I just need something that's actually very seamless. And pardon me to jump to engaging third-party services. That's where it comes in, where you have confirmation of data. You could use NIBs. You could use social media to actually confirm most of your customers' data without necessarily having to put them through the stress of, packing your mother's maiden name, packing your driver's license number, packing all of that. We don't need to burden them with all of that, because at the end of the day, you're going to pay 15 insurance premium, and I have to probably fill like 20 pages of insurance for them. It defeats the purpose. So again, we could also write on people's ecosystem. Like I mentioned earlier, Ethel, for instance, they already have that's a database hub that we can actually get information from. Customers already registered. Remember the campaign for KYC? They already have most of this data. And so when we write on that particular platform, on that particular digital platform, it makes it easy for us to distribute our insurance product. It makes it very, very easy to access most of the customer base that they already have, because take it or leave it. The current survey that was done was that about 148 million people in Nigeria currently have mobile phones and internet. So it means that if we ride on some of this platform, we'll be able to access all of that numbers. And so APIs now, we don't have to start creating another application so that we can, just to connect with the partners and platform. No. So if we're building an ecosystem, an API-enabled ecosystem, it makes it easy for service delivery, because all it does is actually connect with your own application, and then you just continue the job like that. And so I'd already talked about, engaging third party as well. But again, it goes to show that in terms of claims, because word of mouth is very important, and Nigerians, especially on Twitter, they will roast you. As a matter of fact, a lot of people will call you out for, not paying claims. And majority of what we've discussed on this particular conference, this particular conference today, has been paying claims. I could even remember, Dr. Ekerete emphasizing on paying claims. And it's important because what goes out. I'm going to give an instance for those of us that are, conversant with the the Samaritan woman. When Jesus did something for her, she was the one that ran into the city to testify to what he has done. That's exactly what happens in insurance. If you do something bad, they will run into the city to testify against your organization. And if you do something good, of course, the word of mouth will still go around and say, oh boy, this actually works, and I think you should try it. So it's important for us to partner with third party, so as much as possible to make the service seamless. Curacell already provides a platform that allows for adequate claims payment and fraud detection. It would be nice to actually have all of those third service by your side in order for you to get adequate information and underwriting experience. Now, in terms of distribution, again, as much as possible, define the distribution model. It's as important as it is to reskill your product, to bundle your products, and to penetrate the underserved market. Next slide, please. All right, so in conclusion, it says, given the low insurance penetration challenges faced by insurers, it is therefore important to focus on expanding into the bottom and middle of the population pyramid, ever ensuring the uninsured through various distribution channels. So it's as important as it is that now we need to shift our focus from the HNIs, that's the top of the pyramid, to the very bottom of the pyramid, and it might surprise you that the product you put for the bottom pyramid might not actually the needs of those. Go back, try as much as possible to understand the market again and come back with better fit insurance products and insurance services that could fit this population. I believe again that this is one way to go in order for us to penetrate the market. This is 2020. I know coronavirus happened and this year has come to an end, but then there's 2021 coming. And I don't think that the next time we want to be seeing insurance penetration index rates, we want to be seeing 0.3 for Nigerians, because it's important for us to drive this conversation and take it to the market. And I'm happy that most of the incumbents are also here at InsurTech startup. So I think that this should be a wake-up call for us to shift our focus from the high net worth individuals and move it to the bottom of the pyramid. On that note, I'd say, thank you very much. I hope you enjoyed the presentation.
Wow, amazing session. So we have a few questions. So I'll share that. So there's a question here from Joseph Ife Asemota.
Okay.
So with respect to FMCG, it's good, but then how can we be certain about the quality of the sachet products as compared to the original product? I understand you trying to reach everyone possible, but won't that affect quality?
Okay. Thank you very much for that question. I think it's beautiful. It's a beautiful one. So the thing about sachet size products does not take away the actual insurance products. No, it's just sachet size in terms of so going back to the FMCG's Bailey's bottle, for instance, the fact that they made the sachet size doesn't mean that they are actually going to take away from the market the big size bottle. And it's just sachet size insurance marketing rather actually just focuses on shrinking that particular Bailey's big bottle to that sachet size, so that people who can afford to pay for that very large bottle can actually enjoy virtually the same benefits. But of course, you know that it's going to be reduced to the sachet size. So what it means is the satisfaction you get from the big one would almost be the same satisfaction you get from the small one, except that they would obviously not be the same size. So if I have the big one, for instance, if I have, say, 1 million life cover for a particular premium of 5,000 naira, for instance, and I'm bringing it down to the sachet and say, I'm going to give you the premium of 5,000 naira, and I'm going to give you a premium of 15 naira, and of course, you won't be benefiting the 1 million naira life cover. No, you would actually be getting something smaller, because now I have reduced it to the size that you can afford. So sachet size actually takes a look at affordability, but that doesn't reduce the quality. No.
All right, that's great. Thank you very, very much for me. That was end to end, right? So yeah, so that's the only question that we have, and I want to say thank you very much again for sharing that. And so the next segment is going to be the final panel session, final roundtable for this event. And so it's going to be holding in the next 10 minutes. We're going to be having people like Ekerete Ola Gam-Ikon on Okoyemi Oshiemi. He's going to be on Samuel Badu. He's going to be on Richard Leftley as well. He's going to be speaking, and you don't want to miss this. We're going to be talking a lot about customer experience and even the distribution arm of the insurance value chain. So you don't want to miss this one. This is quite interesting, and these guys are professionals and they are on top of their game even in this space. So it's quite interesting how that is going to pan out, and the conversations that we're going to get from that, and like we said earlier in the day, the action points, the way forward, in order to move all of these conversations to the next level. So join us in the next 10 minutes. Thank you. Hi everyone. Welcome to the final lap of this first ever InsurTech Business Series Conference. We are super excited about this. We are super excited about all of the conversations that we've had so far. We are super excited about the impact that we feel that this is going to make in the minds and the careers of everyone who has been a part of this. Thank you to everyone who has spoken so far. And we're having one more roundtable. And like I said earlier, this roundtable is going to be about customer experience and even the distribution part of the insurance value chain. And to moderate that session is no other person than Ekerete Ola Gam-Ikon. And the other panelists on this session, we have Richard Leftley, we have Okwayemi Oshiemi, we have Eunice Maina, and we also have Samuel Badu. So these are the people who are going to be a part of this session, and it's definitely going to be an interactive session. We're definitely looking forward to that. And in a couple of minutes, by the stroke of 2:50, I would hand over to Ekerete to take over this conversation, and definitely know that it's going to be very, very interesting. So welcome everyone, welcome Richard, welcome Ekerete. We're waiting for Eunice and Samuel. So thank you.
Thank you very much, Damola. I hope you can hear me, just to be sure every other person is hearing me.
Yeah, we can hear you.
Fantastic. All right. So we will start off now. I don't think there's anything wrong with starting off before it's 2:50. So I'll just like to start off by saying to us that so much that we've heard since morning, there's no need trying to bore us anymore with all of what has been said. And I do look forward to, the kind of interaction that can really make people bring home all of what has been said. The products are there, the companies are there, the aggregators are waiting. And all of the kind of players that seek to play in this potentially highly rewarding sector, and so I'll just take off by letting everyone, quickly say something about what their own personal experience has been, and then we will begin to share our different thoughts on where the issues of distribution are for insurance and what we think it should be going forward. And of course, the customer experience, it's one big word that we use all the time. However, we have, I think, shortened it to that word called trust. And so if we discuss it from that point, we will be able to appreciate what has gone on regarding the place of insurance in the lives of people. So I'll let us start this. I'd like to start with you, Richard. Just let's know what your experience has been, and then we take it from there. Okoyemi is here. Thank you, Eunice, for arriving just in time. So we're looking forward to Samuel joining us shortly too. So Richard, let's go with you first.
Okay, so I think you wanted me just to quickly introduce myself as well. So my name is Richard Leftley. I was the founder of MicroInsure. So for the last 20 years, I've been very focused on the mass market, on the low and the middle income sector, and trying to work out how to bring insurance to those people. I started off working in the microfinance space in the early 2000s. So 2002, I started working in Zambia, and then found out across Africa and Southeast Asia. In 2009, I pioneered the introduction of insurance through mobile phone companies, starting in Ghana. and then moving to many other countries with many of the different mobile network operators. We signed up over 65 million customers through that channel, expanded that into kind of using call centers to drive sales, again, through brands like the telcos, the mobile wallets, and the ride-hailing companies, as well as some of the e-commerce platforms. Most recently, we transitioned from being a broker, an InsurTech, to being a reinsurance company. So we're still an InsurTech. We're still involved in designing, in selling, in servicing through our IT platform, but we added to all the things that we used to do a balance sheet. And the reason we did that was because we couldn't get the insurance products that we wanted from the traditional insurance companies, but we also found that the economic model, we weren't getting paid sufficiently as a broker for the work that we were doing. So we needed to own the balance sheet. I mean, I don't know, do you want me to talk a bit about, you mentioned about this idea of trust and the importance of trust. Would you like me to expand on that, or would you like to do introductions from the others?
Oh no, let's take others and then we'll come back to that, because when we start that discussion, I'm sure we won't end it.
Thank you.
Okay, so Okoyemi, please, next. Thank you, Richard.
Yeah, hello everyone. My name is Ope Oshiemi. I'm a serial entrepreneur and I negotiate better outcomes for insurance in Africa. I co-found Claimsify, where we are seamlessly simplifying insurance process and experience across Africa. And I also, envisioned InsurTech Africa, which is a social enterprise for sector-based innovation for development, sustainable development, and impact of insurance sector across Africa. Very clearly, my experience about insurance basically have been, the fact that it's such a powerful tool. It's a powerful tool to impact life in a real-time way. And the fact that over the years, people really haven't felt what truly the power of insurance can do. And what we really want to see is for people to authentically and genuinely begin to feel the impact of insurance and how it's so key and critical to their everyday lives. And I know that as the InsurTech space begin, to get the traction that we've waited for in the last 18 years to begin to take off, I strongly believe that people, particularly people of Africa, will begin to see how important and how it is key to their lives, and hopefully that we will together, create that enabling environment and work with them as well to make things happen for them, so that insurance really become, a default for them to take without us having to force them to do it. They begin to see the value in it and they will be the one to run to it.
Fantastic, fantastic. Okay, thanks so much. I mean, it will become a default for them to take. I have taken special notes of that. I like the way you've put that. Eunice, you've been, in this line for some time now, and I think we should just have handed over all of this for you to do a presentation in view of your experience. But please introduce yourself and let's hear what it's been for you. Thank you so much. You're welcome.
Thank you very much. I appreciate being here. Yes, I'm Eunice Maina, the CEO and founder of Bismart. Bismart is an InsurTech in Kenya. And yes, I've been an insurance agent for many years. I've not always been an agent, but for me, the insurance sector is a sector I got into just by curiosity. Because by nature, human beings are curious. Some are more curious than others. I think I'm more curious. And so when I saw that, people were chasing away agents, my colleagues where I was working, I was a trainer. And I wondered why, if insurance is that good, why don't people like it? And so I joined insurance to actually find out if it is that good, why don't customers like it? And I discovered quite a number of things. One, there is a lot of mistrust, a lot of misinformation, and this has made insurance look very vague to customers. And so because people will not buy things that they do not understand, so then the penetration is low. Yeah, so anyway, I've documented that story on this book. You can get it on Amazon, Sell Me This Pen. Just my journey in the insurance sector and my discoveries and what I believe can be done. It's called Sell Me This Pen. You can find it on Amazon. Yeah, so Bismart was started 2017 to just try and answer that question. Because when I started selling insurance as an agent, I was told that insurance is not bought, it is sold. And my question has been, why is it not bought? And I like what OPME has said. How do we make it bought? So in the quest to answer that question, I started Bismart, and we're still, in that quest to answer that question. How can we make insurance bought and not sold? Yes.
Wow. Yeah, thanks. You're welcome once again. And it's interesting that, we all seem, from Richard, Okwe, and yourself, we all seem to have a common understanding that, we cannot do this in the same way we've been doing it and expect to get, a better result. Yeah. And so I'll just like that we dive into the real issue of the distribution of insurance products. Usually a lot more reliant to the familiar ways that we know: agents, brokers, banks have sold insurance through bank assurance. And then when people need insurance, what they do first is to make a call to that person that they know, and like you rightly said, Eunice, and I think Richard said that also in his earlier presentation, there is that challenge of the first person you meet. What does it tell you about insurance that will encourage you to continue the journey? Sometimes it is what you've heard the first time that makes you determine not to continue. So in spite of the fact that the guy will keep calling you and keep coming, you had already made up your mind from day one not to continue. So I would like that, Richard, I will come back to you, that we speak about this, and let's try and explain why we need to have, people that are well-trained, ready to convince people when they have that first meeting. What do you think we're doing now that we should be doing differently, to make that, first time experience, the first touch point you get? How do we make it something that the guy that meets you or meets the point will want to hold on and continue the journey? Richard, please.
Yeah, sure. Okay, so I think this topic of distribution is really the critical issue. If we want to succeed in providing insurance to the mass market, it isn't about product, right? So for decades, insurance companies have been trying to sell products to people, and to taking a very product-led approach. Now, in my experience, we're selling policies that traditionally, historically, were somewhere between 3 cents to about $1. Increasingly, we're going up market, but we're talking about kind of like up to say $5 a month, right? Down from about 3 cents to about $5 a month. And at that kind of price point, my experience is that it's extremely difficult to use a kind of an agent or a bank assurance type model. And the reason for this is because you just can't sell enough policies to actually justify the cost of the agent, okay? So what you need to do is you need to go, and what most of us have done at that price point. I'm not talking, there are other price points, and so there are other models that might work in those kind of approaches. But what we're talking here about is the very, very, the very low income market. We found that you have to go down a B2B approach. You have to partner up with someone and the business that you're going to sell through. So you can use a B2B approach, or you can use a B2B2C approach. The difference is that you might put a call center or a USSD or an end of call notification. But the fact is that what you need from the business, from the partner that you're partnering with, is two things. One is you need their brand, And secondly, you need their payments mechanism, their method of collecting money from the client. Because what we found is that you have to remove friction from the customer journey. So the reason that we've partnered with telcos, with mobile wallets, with ride-hailing companies, is because they've got a large number of clients who are frequently using their service. Okay, so what we found is that people trust services which they use frequently. I mean, do you ever think about why you trust your telco? The reason that you trust your telco is because you regularly purchase airtime, you top up your phone with airtime, and it works. And so in your head, you think, you know, Airtel or Tigo or Voda or whoever it is a good company, because it reinforces in your head, okay, I bought something, it worked. I bought something, it worked. Or I booked a ride, the car turned up, they got me there, they charged me what they were going to say. And so we're looking to partner with organizations that have a large number of clients who use them frequently, but also they need to have a payments gateway. So interestingly, we partnered up with a whole bunch of organizations that have, you know, people like churches, people like cooperatives, people like NGOs. We found these organizations, they were fantastic in terms of, you know, the trust that they had in the community, but they didn't have a baked in payment gateway. They didn't have some way of collecting the premium. You know, the client had to go and pay the money over M-Pesa or go to this system and pay the money, and people simply won't do that. So what we found works is that if you can make it extremely easy to sign up, as easy as buying a ringtone, right? So if you can just send us a single text message, and that's your sign up process. And then if the payments can be done as easily as, say, you know, airtime deduction from your airtime balance. So, you know, small, you know, we use that system for buying ringtones. We use that for horoscopes. We use that for sports scores. Why don't we use it for insurance? And in those markets where the regulators allowed it, insurance has taken off. And in those markets like Nigeria, where the regulator won't allow it, guess what? You're still at like 0.1% of the population have got insurance. So removing friction from the customer journey has been absolutely critical in succeeding in getting over this apathy of, I don't have insurance, I don't know anyone who has insurance. If you make it too difficult for me to sign up, to pay for insurance, I will just default to my default position of I can't be bothered. And we've got to overcome that by making it easy.
Just hold it there. I'll come back to you because we've used that word default.
I think you've had a brain freeze.
This will go. All right. Oh. So now let me come back to you, Eunice, because I do know that in spite of Okwe's drive for a complete deal on the value chain of insurance, you know, the selling part, you know, and the buying part, it's where the issue of experience, you know, comes out of. And like Richard rightly pointed out, you know, whether you're doing it to B2B, B2B2C, you find out that it's easier sometimes when you embed insurance in what is working, you know, rather than try to create a different path for insurance to come to you. So from your experience, Eunice, what have you been able to do, you know, in partnering, you know, or collaborating with different entities like Richard has described, you know, that makes insurance work, that makes it work?
Well, yeah, just before I answer that, I just want to maybe overemphasize what Richard has said, because it's very, very, very true. Where I come from, in the village, we used to have cows. And cows sometimes did not like water. So what we used to do is we put salt at the bottom of the water because cows really like salt. So, so when you put salt at the bottom of the water, the cow will drink the water so that it reaches the salt. And I believe that is how we need to package insurance, that it goes together with what people love and enjoy and already have experienced. So yes, the embedding insurance is a very critical part. So as an InsurTech, what we've done is that we've created a platform whereby, say for example, an MFI that is giving people loans can actually embed insurance in the loan so that then the customer take up the loan plus the insurance. So what we've done is to create a technology that enables that. Say for example, if it's a supermarket, as I do my shopping, that we're able to enable the supermarket, to, as I do my shopping, a little bit of my money goes to my insurance. The similar to the cow and the water analogy. So that's what we are doing. I will not say that we have, been, because we just launched that technology 3 months ago, but the uptake is going well. We got a supermarket that is already adopted the technology, and we are hoping that we'll be able to get the customers adopt the insurance. Yes.
Okay. Thanks. And so you see, we begin to have the possibilities, so to say, of seeing these things work, because people trust what works, right? I'm just restating what Richard has said, and so that takes me to the issue of claims in insurance, because when you buy insurance, the only time you know it works is when you have a claim. That's how I put it to people. And so Okoyemi, you would like to tell us from what you have done so far. What I want you to talk about is to have a good claims experience, knowing that the moment the guy has an accident with his car or the guy has his house burnt, it's a sad moment for everybody. But how do you, begin to turn that experience as we speak into something that the guy looks at with confidence rather than, a state of despair, And while you are at that, I need you to also look at the regulatory side to some of these things, because it's nice for us to talk about what is good. From Richard's experience, regulatory environment supports what he's done so far. And I think Eunice has that experience also. But all morning we've been talking about regulators also. So I need you to look at how do you get, the policyholder that has a claim to look forward to the claim being paid, rather than get scared and not be sure that my claims might be paid.
Right. So I would say that from the point of underwriting, if what we do, if we're deliberate and purposeful about what we do, that would...
What are we now?
The we now, the underwriters, the players, all of the brokers, the agents,
suppliers,
the aggregators, regardless of what technology they're using to drive in that and all. If we're deliberate and purposeful about this, beyond the bottom line, first, if we're focused on the impact, then it's a lot easier to think right from the get-go how all of the customer journey back to back, from when you get to prospect them to when they take it and when the claim occur, to foresee what could happen, the sort of thing that they get to experience when a loss occurs. Now, I've been there firsthand. I've always been passionate about insurance. I know very well how important and how strategic it is. But then again, I did have a life situation where, practically all we had got raced down by fire. And right there, just like never before, that sort of reinforced the fact that, what, this journey is worth it. To really see that when a loss occurs, and it's so very true, that it is at the point of claim that if someone is so worth the deal. Because at that point, these people are vulnerable. There's a whole lot of, emotional, psychological stuff going on. There's a whole lot. They are vulnerable. They could open up to people that typically they probably wouldn't even have shared, their personal issues with. But to see, it is at that point that insurance need to come in such a way that it's not just about you paying the claim. Beyond that, before we get to that point, what about stepping up, as a first responder? What do you do to someone that have just, experienced, an accident or a fire, situation? What happens, to a human side to say, you know what, you're leveraging technology, you're really able to know real time when a loss occurs. So take, for instance, a fire. Given that, our system is working, let's say, the fire services is well integrated, the database is well integrated and all of that. When a fire occurs in a house, it should be able to trigger to the players that there's a fire occurring somewhere. And instantly, that process should bring right in the people that are stakeholders in this. The underwriters, that is the people, the people on the policy that would have to pay, and also reaching out to these people instantly to let them know, you know what, we can see there's a fire, everything is in control. The fire services are on their way. We're sending, to you this pack, just, the relief pack for the interim. Just get yourself, be rest assured that this claim is going to be paid. But first off, we are concerned about you. Where is the next meal coming from? We want to make all of that available to these people. And that is, customer experience in itself. So the thing is, we claim we need to begin to bring in the human side of managing and relating with people, not just, the mechanical side, fill forms and all of that. That's even, the later part of this thing. The first part is the first responder, which is how do we empathize, authentically empathize. Don't send a massive, a mass communication, a mass text or something. That's robotic, as it were. Let's be human. Let's bring in, the human side of ourselves to insurance and how it works out. So for claim, I would say that, it's a fantastic selling point. If we begin to think through how claim runs beyond just paying the naira and the kobo or the dollar or whatever it is, that is the payout, but also looking at what goes on when a loss occurs. Someone just had, a motor accident, right? We should be able to see real time what's going on. We shouldn't belabor them with, go get police report and all of that. The system should be so integrated that they can send in this information real time. And beyond that, we should be able to send to them, the towing vehicle that can first, tow this thing away, ensure that they're fine. If they need to be, checked into hospitals almost immediately, if it is so, fatal and all of that, those sort of things. Those deliberate way, being, deliberate about what we do and putting, factoring all of that into our processes. Now, the thing is, technology, digital transformation is not so much about technology. It's more about people and process. Technology is just a tool to make it happen. So when the focus is first on people and the process, we would be, more deliberate and purposeful about, real time, what could happen if there's a claim, if there's a loss. The psychological side and all of that, and bringing all of this and distilling this into ways that, technology can then help drive it. I believe if, everyone, all of the stakeholders and the players begin to think in that direction, claims would be a lot easier to administer, and the turnaround time will be a lot faster and more impactful.
Okay. Now, what do you think about the role of the regulator in this respect? What's been your experience?
Oh, well, so it's been, trying to, at a point, we were trying to see how we can have, take for instance, the NID, database, plug into that database to be able to make, motor claims a lot easier and, faster and all of that. But then, the question I've always been, okay, do they have, say, an API that we can plug into? But really, we really couldn't, figure that out. The database, we've not really been able to connect to the database, that's just, one part for motor. So for fire, the question then is, how are we able to plug into, the database of, say, the fire services and all of that? That again is a bottleneck. We really don't have, that structure as it were. So that brings me to the point of that, even as regulators, we need to begin to think, I think we need to focus more on how to enable, an environment to authentically thrive. So it would be that, how can we make happen things for others, say, the service providers, say the fire service, for instance. It's not just about, donating, clothing or something to them. Can we authentically invest into, encourage them to have a database, push those things, put our money where our mouth is, invest in these things, and let's, make all of these things happen and encourage, all of the players within that, ecosystem to make it happen. When that happens, it makes it, easier even for innovators and all of that to really, ride on these infrastructures to really make things happen that will continue to impact, life and, the economy real time.
Thanks so much, Okpe. I need to get to Richard right quickly. Sam, you are welcome. It's good to,
I was just going to say, I was just going to say, it's fine to talk about the regulator on claims, but the way things are in Nigeria, it seems that the regulator's aim is to stop anyone selling any insurance. So there's no point in trying to get them more involved in claims if they won't actually allow us to sell any insurance and collect premiums, right?
Oh, wow. Oh, wow. That's interesting. But Richard, I was going to say that part of what happens when a claim occurs is that the insurance company could actually make a deposit payment to the policyholder. When something goes wrong, when there's a claim, is this something that you've practiced?
No, because that's just really clunky, right? We've got a product at the moment where, for if you get a crack on the screen of your phone, right? So if you get a crack on the screen of the phone, you send us a picture of the phone, we send you back the money. Why are we talking about a deposit? If there's a crack on the screen of your phone, then we'll send you $20. That's the insurance product, right? We just credit it to your account. How hard is this? This is simple, right? Insurance is supposed to be about something bad happens and you just get paid. And people's experience of insurance is that something bad happens and then you have to do all this kind of crazy stuff and wait 90 days, 120 days, beg them, please sir, can I have my money? It's ridiculous. That's why people don't trust insurance, because it sucks. You go to Nairobi, you'll find people beside the road saying, no, don't give me your insurance details, just give me the money. I can't be bothered to deal with your insurance company, because they know it's so difficult, right? That's the truth. That's people's experience of insurance. It's so bad.
Good.
So, until we can come up with products which are easy to sell, easy to pay for, and then easy to claim. And by easy to claim, I mean, you make one phone call, you send one text message, you get paid today, tomorrow, the next day. How hard can it be? If we can't do that, then really we should all just go home,
Fantastic. Thanks so much, Richard. Okay, so Sam, thanks for joining. What we've been talking about, of course, it's all of the things that have been going on with distribution and all that. But, from your experience, Sam, you've done something that's, it's meant to leverage, create opportunities for insurance and all of that. It's too early to talk about what the claims experience has been for your product, but it would be nice to hear what is the plan that you have in place should people now begin to desire to make claims, by the product that you have put in the market.
Ekerete, thank you for that. I wanted to say I was having trouble connecting, but I was following on YouTube because I could watch but couldn't connect my Zoom, so I had to find a better connection. Richard has been phenomenal listening in, because what he's describing is really the situation on the ground, right? And combating that is the very first, probably the hope of any insurer or regulator, to be able to bring confidence into the marketplace that allows it to grow from there. Now, coming to your question, with regards to what we're doing at Fleury and what that experience has been like. One, we started right from the start, or right from the beginning, making sure that we were dealing with direct settlement, right? So that we avoid that claims process with health insurance, right? And so, because all payments are going to the hospitals on our end, our customers and their beneficiaries actually don't have to deal with the claim experience, except for setting minor cases where that happens. So that was the very first step to being able to carve out a customer experience on that front, while we worked out the kinks of what will happen when we start introducing other products, right, that require a more robust claims process. The other thing is, by focusing on what the experience of the customer in most of your cases should be, you can start to understand what that guided claims experience or that guided customer experience should be, right? And so the few things that we're doing on our end is, one, allowing to have for navigation, so that if you had a claim, you weren't navigating that claim process yourself, right? So you don't have to say, hey, Mr. Insurer, you have to pay me for this. But rather, if we take it upon ourselves to manage that process, then we insulate the end beneficiary or the customer from any of the, the inconveniences that come from it. So the only thing that they see is an effected claim.
Interesting. Fantastic. So you were able to, put the claims in the context, like we're discussing, that people trust the fact that, this thing will work for you. And so they connect with it, and they actually look forward to it. Like Dr. Neto would say, let people look forward to being paid claims, and we all know that it triggers, interest when people look forward to being paid claims. I see that we don't have too much time left on our hands, but what I would like to do at this point is, you all have heard how it's been with the Nigerian case. Since morning we've been talking about different experiences, and then Richard has hit it on the nail with the regulatory approach, and that gives us something to think about. So I would just like that, we each take, a minute to talk about what we then think should be the case when we begin to compare different countries in Africa when it comes to customer experience for insurance. How do we bring these different experiences? It works elsewhere and it's working elsewhere. Yes, we are all on that journey, but how do we bring these different experiences, to bear on what we are doing? I would like to start with you, Eunice. How do we bring these different experiences? You just got a minute, to speak about this. What you're experiencing in Kenya, you've heard what's going on in different other parts of Africa, and you've had some experience yourself. How do we win this battle in Africa?
First of all, I think Africans are similar in many ways.
Good.
They are similar as they are different. And I think we need to come back and ask ourselves, because the penetration is so low, what have Africans been doing? How have they been managing their risks? Mm-hmm. And when we look at how they have been managing their risks, then ask, how can we, not discard their way of managing risk, but how do we make it better? For example, Africans, this issue of crowdfunding, it's very common in Africa. It looks like it's a new concept, but it's not. Yeah. For Kenya, we call it Harambe or Chama. So we always come together And if someone is in trouble, we contribute. So if for example, I have a member of my family who is sick and is admitted in the hospital and the bill is high, I call my friends and the friends of my friends and they contribute. So we understand that is how we manage our risks. So from my perspective, we need to ask, if that is how we manage our risks, how do we use, because that's a form of insurance anyway. How do we look at that and make it, improve it? And we like to experiment at Bismarck. We really experiment a lot. And recently, or rather 2 weeks ago, we've started piloting a product whereby—
Sorry, Eunice, you have to wrap it up. Yes, go ahead.
Yeah. So we are saying is, because we contribute, like if I'm here with my 10 friends, if I'm in danger, they contribute. So why don't we contribute for premium, and then we share cover? Whoever gets into that situation can be paid. So we actually piloting a health insurance plan where you can share a policy without being related.
Okay, thank you so much, Eunice. Thanks so much. I got this. Opeyemi, there's a way I want you to answer this, because there's a question for you which I would like you to take along. This question comes from Witness Godwin Usoro. His question is, these add-on services, in addition to claims payments that Opeyemi raised, how can it be added to pricing and would also not affect the profitability of the business? Opeyemi, you want to take that?
Right. So I think that what typically always gets us into this trouble of people not even valuing, insurance, is the fact that we continue to put profit before impact. I mean, you would have to invest something to be able to make returns. If you're not authentically, concerned about the people you want to sell to, how then are you, how is the bottom line supposed to add up? So I think that we shouldn't look at this as additional cost. It should be an outflow. Just see it as an outflow of being authentically concerned and, being genuine about making life, easy. So it's not, I don't see that add-on. I mean, I really don't see it as an add-on, as it were. It's a value-adding, way of, getting to establish, a relationship with the people that you want to serve. When you serve and serve right, the profit will automatically come. I mean, momentarily, it might look as though, but on the long run, you will recover all. Okay, great.
So in 10 seconds, what will be your last words, Opeyemi?
Well, my last word would be, let's integrating insurance in a creative, and deliberate way into the lives of the people. Let's invest into the lives of the people we even want to sell insurance to. So let's be part of initiatives that continue to impact authentically the life of people, which then makes them to want to take insurance by default. So let's put in the investments and the intentionality to make this happen. Yeah.
Great. All right, Richard, you have 10 seconds for your last words, Richard.
It's all about distribution, and the regulator needs to get out of the way.
Thank you, Richard.
Richard, yeah.
We can't stop. We can't stop talking about this.
This is a British 10 seconds.
I know.
You give an African 10 seconds, she'll speak for 5 minutes. So there you go.
So Sam, you got your 10 seconds, right?
Yeah, for me, it's all about putting yourselves in the shoes of the person whose life you're trying to affect, and building solutions around them. There are lots of creative ways that we can do this. one, the biggest one, preventing people from having to pay an entire years of insurance ahead of getting it is actually the first step of getting people interested in taking insurance. If we're able to figure out simple things like that, we'll have the opportunity to innovate around bigger things.
Fantastic. Great. I've had fun. I've enjoyed myself, and I do believe that we all have. So I'll be handing this back to Damola. Thank you very much. I have the opportunity to have done this. Great.
Wow. Thank you very much. Thank you, everyone. Thank you, Richard. Thank you, Okpeyemi. Thank you, Sam. Thank you, Eunice. Amazing session. Amazing. I think this is the best so far today. I mean, nice 10 seconds, Richard. Yeah. So thank you very much, everyone, for sharing your thoughts. This was, I mean, it's quite important that all of these conversations go, and then we transition to actually making efforts towards, taking this industry to the next level. And that's why we're having all of these conversations. And it's a pleasure that you have decided to come share your thoughts and opinions even with us this afternoon. Thank you, and thank you. And yes, on that note, that is the last session for this year's event. That's the InsurTech Business Series Conference. Wow. For everyone who has been with us since 10 a.m., you guys are the real MVP. You are the reason why we put up this event. And I'm sure that if you have not taken 100 things, you have taken one thing. You have taken one thing home, and that's what's important. That's what's important to us. And it's important for us, again, for you to take all of this knowledge and this newfound ways of thinking, things that we've learned today, and apply it in our work from Monday, in fact, from tomorrow, because I mean, we now all mostly work from home, and so there's no, I mean, that work-life balance is blurred. Work starts now. That change that we need to see, is here, and it's important for us to take advantage of it. Thank you. To hear from some of the attendees, I know that you've been a part of this since morning, or you joined halfway. I want to hear from you. You have any comments or questions you want to direct it to some of the speakers who are still on? Sam is still on, Okpeyemi is still on, Ekerete is still on, Dushima is still on, Folumi and I are still here. You have questions, you have comments that you want to drop, can let you speak. I mean, it's not a physical event. If it was a physical event, probably I'd raise your hand and they'll pass you the mic. I can still remember those experiences. It's been a while. Always do something like that here, so if you want to say anything, if you want to share any comments, please just use the option there to raise your hand, and then we can allow you to speak. And so in the meantime, so today has been very impactful. We've had 3 different roundtable sessions. We've had presentations from the MD of ARM Life, who took the keynote address. And we also had a presentation from Frederick Bisberg on de-risking digitalization, which is something that is in the front burner for a lot of us. Either you are working there directly, or your company is doing something like that. So definitely, there's a lot of value from all of the things that we've heard. You can always take that back to our companies and give back, to them, and say, hey, this is what I've learned. This is how I think that we should do this. This way that we are doing it might be wrong. Why not try this? That's how innovation is done. These things have never been done before, so you have to think your way through all of these things, and you can see the best coming out. So we have a few people who have raised their hands, so I'll let you speak now. Oriel. So you can speak now.
Hello. Can you hear me now?
Yes, you can. Yes.
Yeah, thank you. Thank you for giving me the opportunity to have a few words, just to congratulate you guys. This is fantastic what you're doing. I'm actually from the French part, but I can tell you that I've been here since morning, and I was really happy to see some people I know. I saw Rob, I saw Richard, and I actually had a chat with Dr. Tunde. So that is really great. And, you know, it gives me hope, you know, for the French part of Africa, because, you know, in Central Africa is not quite developed. People who founders of InsurTechs are really struggling, you know, to develop their solution, to develop their products, and they have some issues with the regulatory as well. So it was, you know, I was really surprised to see that we share the same issues. And but I was really encouraged to, you know, to fight for the development of inclusive insurance across the continent. So just to say thank you very much for this opportunity. We learned a lot, and it was an amazing lineup there, and impressive talks as well. So well done.
Awesome. Very much. Thank you very much for your kind words.
All right, so I think there's one more person. Pardon me if I really can't pronounce the name very correctly, but I think Edimo Bowe is raising his hand, or she's raising her hand as well. So would you like to, you know, have the floor? Hi. Okay, so I'm not sure that we can hear you. You might have to unmute your, you know, microphone. Okay, I think we lost him. Oh, all right. We could just while we wait for Ebimo, can we take Otobong? Otobong, you can have the floor now. You might have to unmute your microphone.
Good afternoon.
Okay.
Good afternoon. Can you hear me now?
Yes, yes.
Okay. All right. I want to thank the organizers of this event. It's been a very, very insightful one, and it has really, you know, made me to see the possibility on how to, you know, go about some ideas and some thoughts that I've been having about the insurance industry. I would just want to just say that please, maybe in the next event, we should also make effort to bring a representative of the regulator to also come and see, or maybe hear what's happening across board, because just like what Mr. Richard said, which was his final word, they should get out of the way. I think they are really, really a thing of concern. So please, I think our next event we should have one person from NICOM or from, you know, one of the regulated body to attend, so that they could also understand what it is or what's happening or what they need to do to be able to see how we can bring in more innovation into the space. That's just my own contribution. I want to thank you guys for a good job. It's it's been a very, very good time. I spent this today has been a good time from morning till now, and I've been present, and I don't think I've wasted my time. It's not a wasted time. I want to thank the organizers of this event, and I look forward to such events and to see how to maybe collaborate or partner with, you know, any of the like minds. Thank you very much.
All right, thank you so much. Okay. I think it's actually very valid that we, you know, get the insurers to come in. The regulators actually, unfortunately, we couldn't get them because circumstances beyond our control came up. But like the feedback you've given us, I'm pretty sure that we're going to take most of them back home, especially for what Richard said. It would be a good point to have them address this. But I think now they are beginning to see that some of these changes are actually very, very important. And if they are unable to, it's just a matter of disruption. And disruption, if you don't, disrupt the space, you might be left behind rather than playing catch up. Because most of the organizations that have tried to play catch up at the end of the day don't get it. I would use Nokia as an example. After all has been said and done, Nokia is no longer at the top of mind for people that are buying, digitalized phone at the moment. So, yes, we'll take that feedback. All right, I'm just going to, leave the closing remarks to Damola. But before I go, I'd like to say thank you to everybody that had participated one way or the other in, this conference, and being the very first one and the very first edition for the InsurTech Business Series. We are indeed grateful that you took out your time to have contributed and actively participated in this conference. Thank you so much to the panelists. We are very grateful, and to those that couldn't make it as well. We hope that you're doing fine and you're doing safe as well. And to the keynote speaker, which happens to be my managing director, I'll say thank you for your support. It's indeed an honor to have, people like you allow young insurers like us grow in the industry. Thank you once again to everybody. I'm handing over to Damola.
Yeah. Thank you very much, everyone, for being a part of this. It's been an interesting time today. We'll be looking forward to this conversation all month or in the past few months. And we're glad that, with the feedback that we're getting, at least you took something home, and that's the goal. And that one thing that you've taken home is important that you now take that back and let it inform the actions that you are going to make in the next couple of seconds, months, weeks, as regards the insurance industry, where you play, because we all have a role to play. And you should also understand that it's not a sprint, right? It's a marathon. And for us, again, this is a platform for us to engage the stakeholders, engage professionals to see how we can make the right strides, move the industry forward, do the right things that we need to do. And definitely after all of this is done, like I said, it's not a sprint, it's a marathon. And we're definitely going to be putting together key takeaways from all of these conversations this morning. And we'll definitely share that with everyone, share it as well with the key stakeholders and get them to say, hey, this is what the industry is saying, this is what this is the direction that we are hoping to see the industry go in terms of creating that enabling environment, and how we are leveraging technology and providing better solutions for the insurance industry, and the customers at the end of the day benefiting from all of it. So thank you very much, everyone. Like I said, we'll share the slides. We'll definitely share the slides in the coming days. And this session is also on YouTube, so you can always watch that again. I'm going to watch it again because there are a lot of information here that you can't just digest at one go. You have to go back and really go back and decipher and take home, because these guys are good at what they do, and they honored us with their presence today, and we are super, super grateful. I want to say thank you to everyone that helped to plan this event, everyone, Fini herself, everyone who has Ekerete Ola Gam-Ikon, a lot of people, and I really want to say thank you. A special thanks as well to our sponsors, Curacell and AXA Mansard. You guys were amazing, and we definitely are grateful for that support that you gave us, and we are happy that you are keen to be a part of something like this, where we are engaging conversations about how to move the industry forward. We are happy as well that we are partnering with people who are actually doing the work in terms of, using all of this innovation and technology to change the way that the insurance is being done in Nigeria and even across Africa. So thank you. And to the most important people on this in this conference, the audience, you guys are the real MVPs. Everyone who has been here from 10 a.m. You guys, you have been amazing. I just read a comment of someone who said he learned about the event today, and he has really enjoyed the session. So I'm happy that you have, and that was our goal from the beginning. It must be impactful, and I'm happy that you got value for your time that you spent here. So InsurTech Business Series is really an initiative that we started earlier this year, and we really just wanted to encourage learning, foster innovation, and also help to network in networking and engaging people so that there's more collaboration in the industry, and we can all work together for a better industry. And a lot of things apart from the conference, we have a podcast series. Always listen to our podcast. We engage insurance professionals from all over the world on topics around innovation, about technology, and the opportunities that they bring to the industry. We've had on the event today who have been on our program, and there's a lot of things that we go into talking to them about the opportunities that some of these technologies bring, because at the end of the day, we all have to learn and relearn. So those are interesting conversations. We have the podcast available on all podcast platforms, Apple Podcasts, Google Podcasts, wherever you get podcasts. So just Google InsurTech Business Series Podcast and you get it. And you can follow us on all social media platforms, LinkedIn, Facebook, Twitter, IG, Instagram. So we are everywhere. And yeah, we want to continue this conversation. And like we said, it's not a sprint, it's a marathon. And we definitely want to continue to have these conversations even beyond today. And we definitely will be. This is just a starting point. We're super excited that the first InsurTech Business Series Conference was a success, is a success. And we're happy that you all have been a part of it. Thank you. And on that note, I would like to say, do enjoy the rest of your weekend. The weekend is short. I wish it can be extended to like 1 or 2 days because I need to sleep. I've not slept in a couple of days. So yeah, thank you very much, and enjoy the rest of your weekend. Stay safe, please do stay safe, and take care of yourself. Bye.